Welcome back to the Capital Mindset, everyone. Sorry, I just got off of a phone call and follow-up text message here. Can we if who wants to? Okay, just reading that. Wow, the market's about to close in about 30 minutes. It's really interesting to say the least. I think right before the market closed right now, I noticed that a lot of the semiconductor stocks are absolutely getting smashed. Now, I'm gonna have a lot more free time for like the next 2 weeks, which is nice, and I might be able to do more content. But I'm also trying to unwind and relax and actually keep up the remaining of my responsibilities. But yeah, really interesting stuff. I started watching or reading some of the discussions you guys were having in the chats on the Discord, and yeah, you guys were actually talking about some of these semiconductor plays. Micron's hitting basically 53 bucks. It's closer to 50 bucks now. Now it's really close to that price point. And just the other year, I mean, this was a company that could do no wrong among the retail investor crowd. Well, it's not like a Tesla level that investors were like that. KLAC, a lot of people don't even know about this company. If you ask the average person, do you say KLA corporation? They're like, what is that? What do they do? Exactly. So I know that some of you are actually fans of this company, and I haven't done a video on it, which I think now might be an actually good time to actually get one out there at some point. I see already, Julie Caesar, you say you bought some KLAC today, man. And yeah, happy Friday, Bradley. I love, everyone loves Fridays. It's not a unique thing, but I love Fridays too. Yes. And then yeah, Micron was a bad guy. Oh, you like the watch? I am a watch guy, by the way. So right now, if you guys are watch guys out there, you probably can feel for the absolute horrendousness of the market. Well, if you want to get one retail, it's almost like you gotta buy a bunch of other watches to get the one you want, depending on what brand you want. So if you want Audemars Piguet or something like that, forget it. Royal Oak. If you want Patek Philippe, same thing. Or you can pay aftermarket, and you can pay an arm and a leg for something like that. And there's a lot of other brands that people don't know. A lot of people who are newer, they kind of just go towards, by the way, I just want to also say, because I was actually talking to a Canadian YouTuber, and happy Canada Day, everyone. But yes, I didn't know I had children, but hello, son. I've officially adopted you. So when I perish, you can receive your inheritance. Okay, along with all my other children. Okay. So regardless, yeah, just finishing up watch conversation real quick. A lot of people just scroll into Rolex. This one right here is a newer purchase for me. This one is the Tudor Pelagos Marine Nationale. Since you brought it up, so. I like this watch. They actually made it with partnership with the Navy of France. So for those of you who knew about that watch, it's actually really hard to get right now. So I was actually really lucky. I knew the guy, the authorized dealer, and he actually hooked me up with it. And yeah, so I like it. It's actually kind of like a daily driver right now. Well, it's because like I'm still in that how do you say, honeymoon phase with the watch. And no, I really love the watch. It's got the fixed lugs. Some people like that, some people don't like that. I have a big wrist, and so it fits on me. But yes. All right, so great time for, yeah. So I wanted to have like a freed up rest of the day, so I wanted to still do a live stream, because I still haven't done a live stream yet, because the other one was kind of a live stream, but it's more like the subscriber interview that I wanted to do live. This one is a live stream, so it's for me to answer any questions, interact with you guys. And yeah, so obviously I only interact with you if you provide super chats, because that's the policy here. But obviously joking. But. All right, so yeah, there are publicly traded watch companies. So there's Swatch. Swatch Group actually owns Swatch, Tissot, Omega. Omega makes a bunch of cool watches too. Omega, I think, okay, so this is why I was going with Rolex. A lot of people just get into watches. They all kind of just go towards Rolex. While Rolex is a fantastic brand and it deserves it, it's almost like the crowded out, brand right now. And they only make, I think it's like between 1 million and 1.4 million. The number's somewhere around there, between that many watches a year. And so there's only so much supply to go around. So this is their sister brand. Hans Willdorf also made this brand back in the day, the Tudor. And I don't have any other Tudors. This is actually my only Tudor right now. and it's actually one that is pretty special. So the one that is a 2021 variant is the most rare and the most valuable. So that's also something to know, because I don't know. I think they're only going to make this. I don't know how long they're going to make this one for, but for the most part, most of their watches are pretty available, so to speak. There's the Tudor, I guess what's it called, the Tudor Pro, not the Tudor Pro, the Black Bay Pro. Sorry, that one's a little bit harder to get right now. The Panda, Reverse Panda, those are pretty hard to get right now. But yeah, sorry to. I'm a watch guy too. This is not a watch channel. I'm not like a crazy watch guy like my friend is, who he's actually is going to make some content on that if you guys are interested. But anyways, I am not hosting a party, Julius, but I'm actually just going to watch a movie with my wife. That's what we're going to do. And I wouldn't. Oh, you're saying if I'm going to YOLO? I'm not going to YOLO into Swatch Group. Swatch Group's performance has been rather lackluster, to say the least. But you could check out all their brands. I mean, the thing is, I just mentioned the ones that would come to mind that most people would know, but they have a lot of brands that are really nice too. A lot of the very expensive watch brands that you might know of, they're all family held, right? They're all privately held. So, but that is a publicly traded one. LVMH owns Hublot, but Hublot in the watch community is kind of like, they're expensive for no reason. But we're not getting into that. So I see some questions coming about semiconductors. Yeah, semiconductors. That's what I was just talking about at the very beginning of the show. And I want to not skip over anyone. Oh, well, I don't want to. Okay, last thing I'll say about watches, and then we'll kind of go. So I'm actually all the above. Okay, the ones I can get. So over time, I want to have a collection of Rolexes, Pateks, and APs. But I'm still building it out over time. Okay, but if I had to choose between one, okay, so I only could choose one, that would probably be Audemars Piguet. I like Audemars Piguet the most. I love the Royal Oak. The Royal Oak's my one. Patek Philippe, like I like them. They're actually would be my least favorite of the bunch, and then Rolex is gonna be above that. So I just ordered it from there. All right, that was the last question about watches. Going back to this. Okay, so General Mills looks good, but it's unlike all other stocks. Do you think it's a buy now? I think General Mills is up a lot relative to the market. Actually, it's outperforming the market drastically this year. I think it's more of like a flight to safety play, or that's how people are kind of treating it. So I don't know if I'm be interested in it buying it now. I think that's like a lot of the run. But in a well-balanced portfolio, it has a position. I mean, it's a good food stock. It's a, but I want to also point out that if you're looking at General Mills, have you seen Kellogg's? And I don't know how new you are to the channel, but we talked about Kellogg. Well, actually, no, Steve. I've seen you before. There is a Steve here. I don't know if you're the same Steve and you changed your profile picture. I'm more of a visual guy. I can memorize pictures better than names, but I know that Kellogg's. You can take a look at Kellogg's are splitting it into 3 companies, but yeah, I remember when General Mills was buying Blue Buffalo, and people were kind of skeptical of how is that company going to take on that acquisition, go into a whole other business line. It seems to have turned out really well, but yeah, it's not in the portfolio right now. Okay, no, no due diligence needed after that. Yeah, Swatch Group. You pulled the trick. Yeah, so that was, I want to just highlight that. So for the last portfolio update, that's the thing I've been kind of highlighting. That's why I'm going to a third-party service, later, is exactly that reason, because I have MPW and CPNG. I always say Coupang, because I mentioned in the live stream that I had purchased Coupang and MPW, but very small position. So I didn't even notice it mentally when I was doing the video, and I thought it was updated. It was not updated. So yes, I just want to just highlight that I did put a pinned comment in that video saying this. And so, yes, but they're very small positions right now. MPW is the one I bought. It looks very distressed right now, but it's very tiny, and I'm just building out the position right now. I actually be interested in probably, let me see what they did today, because I just got home actually. So let me see. Let's see MPW stock. Yeah, MPW. Oh, they had actually a green day today. Wow, look at that. But yeah, Stag Industrial is another one that was requested, and we did a video on that one. That's the monthly pair. So do you think semiconductor stocks are going lower? Was debating to buy, now wait or see if sentiment worsens after earnings. Well, the thing is, we've been talking about semis for a while, how semis are actually, the sentiment has been coming down for quite some time, because that what the market's kind of worried about is that business investment is going to decline because on the tail end of things, demand seems to be kind of waning. And then so companies, businesses are making less investments in key aspects or key categories. Inventory levels kind of are a bit concerned. So yeah, I don't know how sentiment will maybe worsen. Like, so that wouldn't be my focus. My focus would just be based off of the current prices. Would I be liking to accumulate or not? And just being patient with that. Again, depending on your time horizon, right? I don't. The only semiconductor stock I have right now is Cirrus Logic, which is a small one, and these allocations are really small. The one I mean, I've been hinting that I might be interested in something like an Intel because of the price. You know, if it gets too low, Micron maybe. You know, Micron is one of the past three. That video when I covered three stocks, I was most interested in Micron of the three, but you know, we'll see. I was hoping for Medifast and Snicko sneak peeks. Medifast and what you mean, like sneak peeks here on the live, and then Micron is very interesting right now. Yeah, I would say it is interesting. I'll bring Ricketts. Oh my gosh, it does the same thing. Lamb Research. Don't tell Strongman Personal Finance about that watch. He will berate you and say that. Well, no, because it all depends. Okay, so it depends on everyone's circumstance, right? So if you have, I think you need to enjoy life. I think that my philosophy, you need to enjoy life, and if you're doing so in a responsible way, relative to what comes in, relative to what comes out, it's all well and good. There's nothing wrong with doing that. Okay. So now if you're making a certain income and then you have to put your entirety of your income to some sort of, luxury product, yeah, like that would be irresponsible. Right. And so this one's not as crazy you can go. Like I feel perfectly comfortable with walking on the streets with this one and, not feeling unsafe or anything like that anywhere. So it's all about, I guess, perspective on that. Cause if you're wearing a Royal Oak or a Nautilus, like, or even a Daytona. Daytona is very recognizable. Daytona, well, even like a Royal Oak's pretty recognizable. Patek, and a Patek Philippe Nautilus is pretty recognizable too. So yeah, but yeah, I understand. Technically speaking, optimization wise, yes, all the money should be going towards my investments, my future, or cash, or whatever. Yes, absolutely. Now, technically speaking, though, I can sell this for more than what I got it because I bought it retail. So if you can get a watch retail, some of these, it's just a market reality at the present moment in time. You can, but that's not the point of it. The point is for me to enjoy it, and I'm going to use it. It's going to get scratched up over my life. I'm not going to sell it. It's for me. All right. You're not going to see my watches on for sale. Okay. Okay. So let me see some of these questions. So yeah, and so I see some of you are saying some things like this one right here, and some like this. Yeah, I love that you guys are building your own strategies because that's like the point of capital mindset. So not for you guys to listen to what I have to say in terms of this is the prices that are good. You guys are kind of like listening. I love the community that's building around capital mindset. All of you are free thinkers. You look at it, you're like, that's the price I'm interested in. And we can have disagreements. And then you say, well, you're wrong on this. I disagree with you on that. Awesome. Amazing. And then even some of you can vocalize it. I love that. Right. And then even though, by the way, like you guys say things and you might find something that I don't have eyes and ears everywhere. So you might see, okay, well, you might not be thinking about this. And I'm like, oh, wow, thank you so much. And then I can kind of add that or collect that to my understanding of a particular potential investment, right? So absolutely. So I love that you're kind of building up strategies, and I see a lot of you even do that. Julius Caesar, for example, I want to highlight you again that you bought KLA today, a stock that I haven't really looked at yet, but you're building strategies, and so a lot of the community here is free thinkers, and I just want to highlight that. That's amazing. I really love that. Okay, so going down. You guys are bringing back up the watches. Yeah. Oh, yeah. That is a beautiful watch. All right, but I can't talk about watches. But we could go on. All right. So Fabio, you should start a watch company and call it VT. Then, yeah, maybe then he'd buy the watch. It'd be so interesting to having a watch company. But I have a friend who's actually going to become a watchmaker, by the way, because that's his passion. His passion is to become a watchmaker, and more power to him. I hope that if he ever works for one of those companies, he can hook me up. But yeah. Oh no. Oh no, don't do that. Royal Oak is yeah, it's so pretty. It's a beautiful watch. The movement's beautiful. Everything about it's beautiful. a work of art. All right. Hey, Fabio, can you please look at Flow Traders, LBTYK? Oh, okay. So I'd probably, let me write them down. L, BT. I've had like mixed reviews on Sven Carlin, not from me, from subscribers. I listen to all the things you guys say. I've heard some people say, like, pointing out there's some stocks he's pointed out in the past that are like, eh. So I want to see if, if anyone else has anything to say about that. Feel free, by the way. But I'll take a look at them and probably make a video on them too. I'm gonna have a little bit more free time, which is awesome, for the next, what is that, like a little bit over 2 weeks. So I might actually be able to pull out some more content, more than normal, because as you've noticed, there's been like not a dry spell, because these videos don't take forever to make, which is awesome about it, and doing it in one go. So I can just like work, do the video, get back to work. The longest thing that ever takes me is honestly the thumbnails. I am garbage at them anyways. Hey, Dark Knight, how you doing? Okay, I think semis are in a short term. Yeah, I agree with that too. While still being in a long-term bull cycle, I think Qualcomm is super close to a buy. AMD looks tasty too. Yes, I'm absolutely agree with that. There's a lot of tailwinds for the semiconductor industry. Everyone can identify that. Now sentiment's kind of changing for the worse. While a year ago they were the king of everything, everyone kind of was on the same page with that. An investor might look at that and say, okay, well, now's the opportunity to accumulate, add, or maybe you know something about a particular semiconductor company that is absolutely terrible. I've had some interesting discussions with some of you out there that you guys work in the industry, and then these discussions were very informative. I learned a lot, of course, because I'm not a semiconductor engineer. So yeah, never would ever claim to be that. But yeah, and some of you guys work in IT, so then different parts of the perspective, but all of it valuable. No, not necessarily dislike or like. I mean, as a people, I don't really know them. I'd have to see who we were talking about. Andy's getting closer. Important question. What's the important question? Did I skip your question? Oh, this one. Sorry, didn't mean to. Also interesting intel for China bill on hold. Because of the China bill on hold. What China? Which specific China bill? Or is that the question you're referring to? I apologize for that. Okay, could you go a little more why you bought MPW? Okay, yeah, sure. So MPW, it's not necessarily that. Well, let me be very clear. Let me highlight like a lot of the risks first, because there's like a double-edged sword. If you kind of refer to my MPW video, I kind of discuss some of the bird's eye view, easy to understand, double-edged sword, mentality of MPW. So with properties that MPW owns, they're not very easily replaced. Okay, so tenants that are in their properties, they can't just build a new hospital right next to it. So that's a benefit. But then the other edge of that sword, where how the metaphor of a double-edged sword, it's also the fact that if that tenant goes bankrupt, right, you have to replace it with a tenant of equal service, right? Another hospital operator. You can't just put in, I don't know, like a coffee shop, right? A coffee shop can't occupy a hospital, right? You get what I'm saying? I'm giving an extreme example, but for the most part, that's the double-edged sword risk profile that you have there. And then similar to Vici Properties, Vici Properties is very similar in this way too, because for example, Vici Properties, they just bought the Venetian. They have Caesar's Palace. So Caesar's Palace, who can occupy Caesar's Palace? Well, Caesar's Palace, the brand, the occupier, the operator, Caesar's Palace. They can't build another Caesar's Palace next to it. You see where I'm going with this? But if Caesar's Palace were to hypothetically, let's say in an example, go bankrupt, right? Well, then what does that mean? Well, who can they put in? Well, they have to put in another casino operator, right? So it's not as versatile. The property is not as versatile as some other properties are, okay? And I think MPW might be maybe even less versatile than something. Well, maybe not. I would say that some experts might debate on which one's probably more versatile, but I guess without question, they're not as versatile as something like a Realty Income's portfolio of properties. Their properties can be changed into a variety of other commercial use cases, so it gives them that optionality. Okay, which is good. But so it's a double-edged sword. All right, and then you see that in their experience. And so some of the things I liked about it was specifically that, but on hindsight, not on hindsight, on the risk side, they are exposed to some operators that may or are struggling in some key areas. Now, then you can identify or make an opinion or formulate an opinion whether or not those risks are priced in, justifiable for the current price, etc. And if you look at historically, it's yielding around near the higher parts now. But the problem is when a REIT is trading so cheaply, right? That's actually bad for its ability to acquire new capital, because a REIT, if you notice, and you see, okay, good thing I remembered this. I remember that there was a comment, and I do read your comments, even older videos comments. There was an older comment that asked me, why are they diluting so much? And I need to get back to that guy, okay, because he deserves an answer. You guys probably know, if you've seen my other REIT videos, REITs are serial diluters. They dilute all the time because that's one way that they raise capital to acquire more properties. And then, ideally, in an ideal scenario, they can acquire properties at a higher cap rate than their cost of capital. And the delta is a profit, and it actually is accretive to the AFFO or FFO of the REIT as a whole. So if you kind of look at it from that perspective, it's not really that big of a deal. But if the REIT trades cheaply or at a higher yield, it actually increases their cost of capital. Make sense? All right. So, so that's a little bit of a drawdown there. I did a stag video. Yeah. Like, I do a lot of videos, and of course, I understand that people work. You guys have jobs. You guys have things you do in your daytime. So I know that not every single subscriber can watch every single video, and that's not the point. And even I do videos about stocks that no one really even searches. So the algorithm doesn't really like those videos, but that's not the point either. The point is to build a catalog. So that the content library is what that is. It's building a catalog of videos. So eventually, Capital Mindset can be a library of sorts of compiled thoughts, basically. Of course, the thing is, stock information or company news, etc., is time sensitive. So things change over time. And so, unfortunately, I'm only one person, and it would be impossible for me to have always an up-to-date thought process, because that would require, massive team, etc. But it still serves its purpose to the best of my ability. All right. So I'm pounding the table on Perry in the cash flows, 30%. I think EdTech is going to be discounted too heavily. Oh, yeah. I actually was reading that when you did post that. So, yes, I think for me personally, it's just I don't know too much about Perry, but I can see the thesis there that you kind of outlaid it well. And I see the thesis there. I think that you're right on that it's going to trade cheaply based on sentiment. Oftentimes, I found some of the best performers in my portfolio have been that. And so if you understand that industry, and you really are mapping that out, and no one else is kind of paying attention to that, people are just focused on the sentiment, you could do pretty well. But I haven't really taken a deep dive look on it because I've been so busy, but I would imagine, based on what I read, that you've been doing that as well. So I like some streaming stocks. I have Warner Bros. Discovery. I just actually added a bunch to it, but not today, the other day. Steven keeps his best picks to the paid course he sells. I follow his videos for information. Sven. Sorry, Sven. I read Steven. I was like, Steven? Who's Steven? Okay, so I follow his videos for infotainment, good ideas, but not so. Okay. Hey guys. Hey Fabio, just here. 69s. Yeah, I'll still buy the position MP. How about that? I'll buy it at 69. I mean, like I did with Rick. Rick, I bought one share. I bought one share of Rick, just for you guys. Okay, so ETFs are really good. Well, theme-based ETFs are really good if you want to just get exposure to that sector, right? That's what they're designed to do. Because remember, the expense ratio is a little bit higher, and you're having a concentrated portfolio on a specific area, right? So if you just don't want to, pick one, and you just want exposure to the whole sector, I mean, why not? That could be a strategy that you decide to employ that's best for you, right? Because it depends on the person, right? But I think that if you think the tailwinds are here to stay, you might go with and you want to just buy and hold that sector because you think that's going to be worth it. You could go with an unleveraged ETF in that sector, because remember, a leverage ETF, you got to be worried about the timing, because if we go down a lot, because you can actually have permanent loss of capital even despite everything. People don't know that about leveraged ETFs. Leveraged ETFs are a different monster. They're for specific types or implementations of specific strategies. So people who are new just want to say that because, be responsible with your money. Okay, so I have a current market conditions similar to the 1973 market crash, stagflation, commodities boom. What do you think? I mean, everyone's kind of saying that, which almost makes me think like that's not the case, right? So immediately when I see everyone is saying something, that means that's probably not that. And history doesn't necessarily repeat, but it rhymes. And so there's going to be some differences here and there. I would say we're more likely to have a kind of a contraction of sorts. And finally, Michael Burry's saying that, by the way, because we've been talking about that for quite a bit, and then he's saying it too, but not saying that he hasn't been thinking the same thing for a while. Probably he was thinking the same thing. But it's more than obvious, I think, because, when you look at how consumers will behave, consumers eventually reject prices, as that's how I've been phrasing it in the past. Consumers reject prices after a certain point. If wages do not go up enough, right, they can reject prices. They will reject prices. And you have necessity spending, like, let's say, food, housing, and shelter, or sorry, I just repeated that. Food, energy, and housing. Right. And then you also have discretionary spending. So, like, people who buy watches, cars, a boat, um, uh, you know, fancy food, eating out at a restaurant, all these things. That's discretionary spending that can get a little bit squeezed on the ends. Look at the industrial stocks for you, Sparky. Go look at the industrial stocks, see what's going on with them right now. See the weakness. Look at the inventory data. Look at the inventory buildup. Kind of look into that and read into that, and then kind of map out, build a logic tree of how that might affect energy prices in the future. All right. And then kind of figure out why the energy market might be responding in certain ways and try to connect the dots in that way. I'm just trying to point you in the right direction, and let me know. All right. So what do you think about buying lands instead of, okay. So I thought about that because there's land where I live that I think would be really interesting to actually acquire, because it's actually in a very nice area. Well, the land's very nice. The area is not nice. You could buy a house in this area for like 50K, and it's right next to downtown. Right. And the area is not nice, very unsafe place. But the land, in theory, maybe one day in the future, if they kind of remove the designation that it currently has as a historical district, it could be worth tons of money. And but the thing is, you're betting on that land depending on where you go. So there's land out here that developers are buying left and right. Private developers, public developers, they're buying left and right, and because there's just not enough of it to go around, and there's too many people trying to move here. Way too many people, way too much demand for certain price categories of houses, because not all price category of houses is selling the same. So the highest end is starting to actually kind of slow down. The mid-tier stuff is expanding depending on what it is. I saw that some townhomes that were selling for about 500K, they started to slow down and actually see some price reductions, because frankly, absolutely ridiculous what they were going for. You got to actually see these homes and be like, that's not worth 500. But this area is getting to that point. Okay. By the way, I apologize if you guys can hear the rain. If you guys can't, all well and good. This microphone's doing its job, but it's storming like crazy. If the stream goes out, it's because the power got cut. Okay. Just so you guys know. If the power goes out, that we'll cut the stream short, but hopefully the power does not go out. All right. Okay. So it took me all the way down, but volatility works with too long of a video. I need to get to other questions, but that deserves its own video on options. I had a request to do an options video, and I will do so with the proper disclosures and asterisks that most people shouldn't even be, doing it. Okay. Because people have been asking for it. It's just, I haven't had the time to make that video, but I can explain that in its own dedicated video, because I wanted to do that as sort of like the educational, contextual parts of capital mindset, but that is coming. I'm going to do it. Believe me. Okay. I promise. Okay. Can you explain the differences between economic goodwill versus accounting goodwill and looking at the income statement? You mentioned in a recent vid. Oh, okay. I mentioned in a recent vid because that's something that they're two distinct things. So accounting goodwill is when you purchase, I'm going to explain it like I'm explaining it to, I guess, middle school. So the layman's terms. Economic goodwill is basically what you're doing when you are paying for something that has derived future value, right? Paying for something that has derived future value. And so, you can have economic goodwill. I think it's also called business goodwill. I think that's the secondary term. Let me, fact check this, because I need to make sure. I'm not the type of person who likes to say something like that and not be sure. Economic good. But accounting goodwill is when you basically pay over above book value or above fair value, and you have to record that on the balance sheet, right? And that's an asset that you're basically acquiring this asset, and you're saying I paid more than what it's worth, and you record the difference as goodwill. So yeah, economic goodwill. And let me just make sure. Okay, so scratch about it being business goodwill. So I just wanted to make sure that it's not or is or isn't. Okay, but yeah, economic goodwill is until it needs to invest in a intangible asset. Both of them, you have to understand, they're all intangible. So in either case, it's an intangible asset. It's not something like a machine per se. But one example, I mean, we could give is Netflix investing in content. All right. One time I made a long time video and I explained this about Netflix. Netflix has to make certain investments into content. And it's an economic goodwill, right? Not accounting goodwill, because accounting goodwill comes from acquisitions. Economic goodwill can come from an investment internally. And so you're investing into this intangible asset that has perceived derived value into the future. So Squid Games, right? They invest in Squid Games, they get this. All right. There we go. I just want to make sure, because I'm pretty sure there is, it was actually synonymous with business goodwill. Pretty sure, right? Let me do this because I'm pretty stubborn. Business goodwill. I'm trying to see the word if business goodwill is used in tandem, but I use mainly economic goodwill. I just want to make sure if it isn't or isn't. Yeah, whatever. I'm not gonna waste too much time because I want to get to more questions. Okay, so I was referring to the question about to this bill that 52 subsidiaries for semis build fabs US to compete with China. Okay. It's referring to the question. Wow. For semis. Okay. So that's the one. Okay, for the government. Yeah, it's kind of being in question right now. The CHIPS Act. Yeah. Okay, so I get it. So my thoughts on the CHIPS Act. I mean, I think it'd be good if United States would direct some spending, because like I have said that, federal spending can be very subjectively be malinvestment, or in some case we can objectively identify it as malinvestment. But I would say, my personal opinion, this is an opinion, that investment in that direction would probably be good for the United States. So my opinion is that we'd probably get some good out of it. My opinion, could be wrong, could absolutely be wrong, could be a completely idiotic statement, whatever. All right, so let's see here. Oh, this is a good question. Fabio, I'm curious about your portfolio weighting. Would you cap your larger holdings? No, there's actually like no cap per se. I don't have like a fixed cap. I kind of just acquire what I like. And as long as I like it, I probably would acquire more of it. Of course, depending on, remember that I said that everyone's strategy should be different because everyone's in a different position. So do you have more money coming in? Do you have a fixed amount of assets? My gosh, the world is ending outside. So the rain's absolutely insane. We're going through like a monsoon or something. Not really, but it's just like a lot of rain. Okay, so, oh, you asked the same question. But yeah, to end it, also, do you use base weightings on market value or cost basis? Market value. You mean market value like in dollar terms of or you mean the market cap, like market cap weighted or something like that? Or like on a cost basis, like how much I paid for it? No. Simpler, just buy assets I like. I don't even think that far, and that's it. All right, I don't allow my portfolio to consume my mental health. I don't allow that, so I keep it more simple than I think most would. Some people put even more thought into it than I would. All right, so this market is really, yeah, it is, but it's not that bad. People are, I think, a little bit more complaining about it. I mean, yeah, you can they can be political, yeah, but I don't really like, yeah, I understand. Intel specifically is interesting to the community, I guess, not sure, but through anyone, I can tell that particular future outcome in 5 years, for instance. Yeah, I would say so. And so someone who's investing needs to keep that in mind. But yes, let's see here, my gosh, I seriously, I would love to know if you guys can hear that. If you guys can hear that, then, wow, it's loud. All right, so Michael Burry watches Capital Mindset. Oh, okay. If he did, that'd be pretty cool. Not gonna lie, that'd be pretty cool. Okay. I found out one of my next bosses actually watches Capital Mindset, so that's actually funny. But so now I have to be extra careful. I have to be even more, politically correct. And maybe they're laughing because they just heard me say that. I don't know if they're in here right now, but who knows? They watch it passively. Let's not like my boss is like a huge mega fan or whatever. That'd be completely unfair. All right, I nibbled at biotech ETFs. I can't understand a single stock, but I want exposure to this sector. Well, you see, like you've chosen, you've identified that, you don't understand that, but you want exposure to that sector. That was your decision. And that's, a strategy that you can implement. That's why they're there for. But yes, I would say that as long as you're not doing a leveraged variation of that strategy. But Zillow's debt, not really that much of a concern to me right now. Let me actually pull it up live. Okay, so if I go to Zillow's 10 filings, and I can probably put you guys here, and I can share my screen here. I'll share my screen. Let me just actually pull up the quarterly filings. Let me see, the most recent up today was an annual. Let's go to quarterly. Let's pull it up. So I want the most recent stuff. Consolidated statement of operations, balance sheets. The balance sheets. All right, so let's actually take a look at this. I remember when we looked at Sleep Number live, and that was a stock actually beloved by a certain. We found debt live, which was the funniest thing. I'll always remember that because that was funny to me. I don't know about you guys. Okay. Okay, so let's actually share this right here. Okay, share screen 1. Let's go. All right, so you guys can see it now. Let's zoom in. I know that StreamYard's quality is not like the best, so let's look at their liabilities. So convertible senior notes, 1.65 billion. No long-term debt, I see. They have lease liabilities, so they just have convertible senior notes. And relative to their position, it's pretty responsible. So I don't see this as like being a bit of any concern, right? It's not like something that's a huge red flag to me. Okay. Of course, remember, this is still a speculative holding within the portfolio, and that's where it will remain because I think it has a lot of potential. That's be there. So I just want to check out to see if there wasn't anything like new in terms of that I haven't seen before. And yes, there's no crazy amount of long-term debt that they took on that I didn't know about, or even any short-term borrowings that they're just like randomly doing for some weird reason. So I'm way okay with that. All right. So let me go back here. Okay. So I already have one on the works for ELY. I received a request that really wanted it, and they gave me a lot of information about it. So I like to I already promised that viewer that I would do it. So you asked, and I want to let you know that it's already coming. And yes, they acquired Topgolf, which is saying there's also Drive Shack, I think which is their competitor. But yeah, ELY. I actually have a very good friend, not very good friend, one of my best friends. He's his dad is well known within the golf industry. So I'm going to interview him about it. And yeah, you if you watch golf, you've seen him on TV, by the way. So AVGO, Broadcom serial acquirer, they have a very good capital return policy for investors, but I haven't no like definitive thoughts on like right where they are right now. If I pulled up their stock, I imagine that they've corrected quite a bit. Not really, actually. They haven't really corrected that much. 25% from all-time highs, they were down 28%. Okay, but they're correcting now with the rest of the semiconductors. So preliminary thoughts, good company. A lot of people have a lot of positive things to say about it. But yeah. Okay, so you had it in the fun part of the portfolio, if I remember correctly. Yes, it is. Well, fun. It's not the fun. Speculative. No, there are fun parts of the portfolio, which I have, I think, 3 fun holdings. Now 4. I think 4, because if you count Rick's. Fabio, don't buy because I asked. I honestly think sentiment isn't enough yet. 50 is my target is 55. You're talking about, I'm guessing, AMD. Yeah. I don't worry. I'm not like looking to buy AMD right now. I'm buying other things right now. And remember, I'm also trying to maintain a really healthy cash position because I want to buy some real estate. But my gosh, like, if stocks keep getting, it's going to be like hard to keep the money in the bank account and not be buying stocks. So, I mean, yeah, that's that. Looking through this. I'm on holiday. 3 weeks was almost no access to YouTube. And yeah, I know. It's okay. I mean, when you come back, You can always watch more, or you don't have to watch more. It's going to be there for you to watch or not watch. It's okay. Don't worry, Jerome. But I'm very happy that you enjoy the channel thus far. Could you explain your process of searching for good stocks? You probably already did it in the past, but yeah, I haven't actually made a very specific video. You're right. So Nuno. So in reality, I don't follow a strict process for any one company. It doesn't work like that for me. It's because almost every company is different. It could be on a day to day that I kind of find interest in a particular industry, and then literally do it old school. Look up all the stocks in that industry, one by one by one by one by one. We'll look at it, each one, boom, 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 boom. And then maybe I find one, maybe I don't find one, but at the very least, then I now know these stocks exist. So I love learning about new stocks, not necessarily that I like them, but you know what? Here's like, I was actually on the live stream with the two CPA, Strongman, and the other individual. Gosh, you see, I'm so bad with names. And if you're watching, I apologize. It's not you, it's me. It's really me. I'm terrible with names. My best friend, I didn't know his name for 6 months, and when we were like kids. So I always had like a problem with names. Dates, addresses, images, amazing. But names of people, terrible. So the company in question is, and I'll show you guys here as a case study, because I was trying to encourage them to pull it up, because accountants, there are a lot of accountants that are in the capital mindset community, by the way. But I'm going to pull up their SEC filings and show you guys exactly what I mean. Or if anything, I think we can just, no, let's pull up their SEC filings. So, Gencor, by the way, me pulling this up is 1 trillion, quadrillion, billion %, not an endorsement of this company. I'm literally about to show you a company that is Gencor SEC filings. Okay. Let's go to their website. Their website is kind of All right, so I'm going to show you like the process of even finding this, because all right, so this is the company, Gencor. Microcap, just to be aware of. I'm not endorsing it whatsoever. Have no position in this company, but it's more of like a case study of a company that has a value trap-esque feel to it, and I'll show you why. Because it looks amazing. Let's go here. Oh, disgusting. All right, so thank you. Let's go to. I just want to get the PDF file. I just want to have it in pretty easy format. Interactive data. Let's click here. Okay, so whatever. I'll just deal with this. I want it in PDF format. But let's go to financial statements, consolidated balance sheets. And so blah, 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 blah. Okay, so let's pull up their market cap, because you have to look at this in tandem with this. Otherwise, it doesn't make sense. All right, so accountants, have fun with this. Let's have fun. So the market cap is sitting at about 140 million. So really small company, but then let's review this. So then you look at this company and you're like, cash and cash equivalents and marketable securities. Wow, relative to the size, well, they must have a lot of debt. Well, they actually have no long-term debt. They have no debt, right? So then you're like, oh my gosh, well, what's going on with this company? Well, this company looks like, something that is, I think it is trading below book value right now. Okay. And then if you go to the income statement, let me see if they actually show the interest income. Where's the interest income? Oh no, they just compile it, but there should be a breakdown, which is annoying. But anyways, they make a lot of interest income, and the interest income is actually, I'm trying to see. Yeah, here it is. Boom. All right, cool. Interest and dividend income net of fees, 296,000 there. And this is for the 3 months. So that's the quarter. And where's the rest of their operations? So operating income. So it's actually, you see a decent portion, which is insane. If you look at the whole year, you can start to see, right? Like this company is really tightly run. Now, what's the problem? You're like, okay, well, that's all well and good. That's awesome. Okay, it must be amazing buy. No, because management holds this thing like a rock, right? They are not returning capital to shareholders at any friendly manner, and they've done so because I believe there was a lawsuit, and let's actually find this live, because it's better to not just say it and just show it. So Gencor shareholder lawsuit. Yeah, right here. So this is it. And you can, I'm not going to read this all out. Oh, come on. I'm not going to. All right, whatever. You guys can look it up on your own time. But if you're curious, this is just a case study. So we went on this whole tangent just to show you this case study. And I always love pointing this out because it's a small little company no one knows about. And yes, so there was a little issue and a perfect example of something that you have to look a lot, no, not sometimes, always look beyond the financials. So good, good reason right here. All right, with that, let's move back to some questions. I'd be curious if any of you knew about that company or have seen my older videos talking about it. Okay, so JPM 7%. Oh, I didn't even see this part. Oh my gosh, Voyager. We'll see Voyager. Oh, sorry, I skipped the question by accident. Capital Mindset thoughts on HRB. I'm personally selling because of the run up. HRB is, I forget this ticker. H&R Block. H&R Block. Wow, I haven't talked about H&R Block in a long time. I mean, yeah, if you're taking profits, you made money. Great, good for you. That was a loud thunder. All right, so awesome. I don't really have any thoughts on it right now. I can't give you any thoughts and be any sort of okay, so am I able to retire completely? My parents are Metallica. Yes, if they are, great. Voyager Digital is still getting hammered. Let me see. Oh my gosh. All right, 30% down today. Yeah. I mean, I still remember the comments saying I was silly for that, but yeah. All right, so JPM 7 price prediction this week didn't go pan out, but then again, JPM fails every. Yeah, little shred on there. We can't hear the rain, so the microphone's doing its job. Awesome. So Fabio vacation. Yeah, thank you. Well, I mean, this is going to be an interesting weekend. We're going to go out on. Well, I'm going to go out on the jet skis on Sunday. Go on the boat on Monday. So I'm excited for that. All right, so 3M and WA for long-term div. You guys can hear the thunder though, right? That the thunder's pretty freaking loud. Just shake the room. All right, so 3M and Warner Bros. Discovery. Warner Bros. Discovery. What the heck? Walgreens Boots Alliance. There we go. Walgreens Boots Alliance is now back to the way OG price that I bought it way back when. And I gotta say, I don't know. I'd probably I gotta look at it. I have to look at it. All right. I just found your channel. I love it. Oh, well, thank you. Welcome to the community. And I'm glad you enjoy the channel thus far. Very happy to hear that. Yeah, I know. No, they're more like of a passive. They just let me know that they did, and they're a subscriber. But yeah, so even more reason that some things, guys, I gotta keep it because they're gonna be my boss for I don't know how long, right? So, but they're lovely. You're a lovely person. Okay, so waiting for earnings season, I think that many companies will go bust. Many companies will go bust. You mean like bankrupt? Oh, you maybe you don't mean that. Okay, I think I know which ones you're talking about. All right, I think I know. Hola, ¿cómo estás? We're speaking Spanglish. Capital Mindset, have you looked at PRGS? You know what? Let's Progress Software. What I saw is there's a lot of things I still don't quite understand about the marks because I have to actually delve deep into their customer base. What are they? How good are they relative to their competitors? Right. So, they do business applications, a lot of B2B. B2B software is sometimes very niche, very difficult. So, almost like, as some of you can probably understand, if you guys use it in the field, use their services or any of company services in the industry, you have a unique exposure to that software, and maybe you can understand that even better. So, if you don't use their software, it can be a little bit more difficult. So, when I do a video on them, because they are actually on the list, I have to probably take some more time and try to find out how do they compare to their competitors. But thing is, B2B software is so freaking competitive, and people don't understand. So like when people look at Palantir, you see people talking about Palantir, like we talked about in the past, how people invest in Palantir have no idea what the company does. And I've spoken to some of you who work in big data, and you're like, it's not that special, guys. And you're like, yeah. So you see what I mean? Sometimes retail is going to be very excited. I'm not saying that this is the case, by the way, Dark Knight. And for all I know, you could have a lot of exposure to this and understand this business very well. So I'm not saying you are or aren't. I don't know. So from Spain. Okay, hey, welcome from Spain. I have a lot of people in Europe. Half of this audience is European, by the way. Half of this audience is European. Around half, which is awesome. Have you looked at space and related businesses, mostly growth? No, I haven't looked at space. I have not. Okay, so Capital Mindset. Why is Snowflake not talked about more than Palantir? If I'm interpreting it well, it seems to be better version of what Palantir does, which is still expensive though. Yeah, I think I don't know. It's because some sort of bug took over YouTube, and people love to talk about one stock over another. And is Palantir in the YouTube stock index? If it's not, it should be. It might be. I hope it is. I hope I wasn't silly enough not to put it in there. Which, again, as a friendly reminder, the YouTube stock index is not my portfolio. Some people thought it was for some reason. It's not. It is not. It is a fun, little tracker of the stocks that are talked about on YouTube. And I better have put Palantir. If I didn't, I'm going to question my sanity. But yeah. By the way, I completely apologize if I skip a question. I don't mean to. The thing keeps taking me all the way down to the bottom, and I have to find out where I was. Okay, so I am very concerned about it. Yeah, I'm pretty concerned about it. That's the most concerning thing about the company for me. It has more debt than I think the market cap. And so they promise it, and from what I see, that the cash flows are probably going to be enough to cover the debt and pay down the debt. I will be more relieved after they do or show execution on paying down that debt. Yes, I am interested in some Polish stocks. There was that. So the ones that right now is piquing my interest is the very boring one, the trash one that we were talking about actually in the chat, McBuda. So you remember that one? You were looking into it, and I actually looked into it. I was getting interested. I'd have to do far more research before I, execute a trade or purchase some shares. But I got to be honest, I love those boring companies that are fulfilling a needs-based business in these countries. And yeah, it's very interesting. If I would like to get exposure to Polish stocks now, especially how the dollars kind of reacted relative to their currency. I'd kind of be interested on that front. All right. So maybe right now it'd be interesting. So I know that you are actually doing far more research than I into Polish stocks. So you'd probably actually be a better one to ask which ones are you interested in. All right. How much you know about Qualcomm? I don't know much about them, but I hear that they're pretty damn well run semi-play. Well, they are. There are people within the community who know more than I and have a more intimate understanding of their workplace environment, what it is that they specialize in, or their strategies and how they specialize in those different fields. I know that, for example, they're trying to come after everything in the semiconductor space, such as I know that they're going into RF or really hard into RF. They're trying to take over some stuff that Skyworks Solutions does. And RF design is actually inherently very difficult. It's like a quote unquote dying breed from what I've learned. And so there's a lot of interesting things that they're going with. They have a lot of patent protection. And that's actually a lawsuit that they settled with Apple. If you guys were in the market for that long, you probably maybe remember that back in 2018, 2017, 2019, that era, that Qualcomm had all that uncertainty built into it. And had you purchased then, you did really well because it was resolved to the positive for Qualcomm. And Apple was not paying Qualcomm. They were just putting it into a bank account. And then apparently when Qualcomm won the lawsuit, then Apple paid them the massive cash inflows. And Qualcomm was so confident they were going to win. They were raising the dividend, doing all these things, and people were kind of hesitant, staying away from Qualcomm. That was the time to be buying Qualcomm. So hindsight, that was the time to be buying Qualcomm. So Medifast, let me see Medifast. Yeah, the ticker symbol MED, Medifast. Oh, okay. Well, Medifast, nutrition and weight loss company. This one's going to be a difficult one. I'd have to really look into this, but multi. Oh, okay. Multi-level marketing. For me, I don't like these kinds of companies personally. Right off the bat, multi-MLM companies, not for me. But, they can still be profitable. I mean, it's still been a good investment throughout the 5-year period. I mean, gosh, that's outperformed the market by quite a bit, 349%. So I share the screen so everyone can see this, so you can see what I see. I mean, Medifast has performed really well in the past 5 years, but not really for me. As soon as I for me, read this MLM, but doesn't mean if it's not for me, doesn't mean it's for you or not for you. Okay. Thoughts on Airbnb? Like the company, the platform, the ability for it to, I guess, facilitate these transactions. I think my problem with Airbnb is I don't understand necessarily how that's going to conflict or compete with the traditional hotel markets or hotel industry, right? Is it actually disrupting it, or is it a thing all separate together? And I've heard the arguments from both sides. I'm thinking I'm leaning on it's not even disrupting, it's kind of something altogether. It's a different kind of customer base. My wife, hotels all the way. Me, I don't care. I'd go with either. My buddy, Airbnb all the way. So you see, like my wife does not like Airbnb. She likes the hotel service, everything, right? All that. So, but I like Airbnb. I think that it would do well in a situation once we have some clarity that the consumer is recovering in terms of their ability to spend on that leisure spend, like travel, etc. That goes with Carnival Cruise. And if you remember my Carnival Cruise video, which I received a little bit of heat for it, I guess, because some people really like the company right now. And it's just my opinion. I don't know why people get offended by it, but yeah, Carnival Cruise, uh, same thing, right? They're part of that same kind of division. You'll see that they'll more or less move almost in tandem with one another, not a one-to-one, but they'll move together on a given day right now based on the sentiment of travel, right? And that spend. So let me actually pull up Carnival Cruise, CCL. What are they doing today? Okay, so they're up 1.97. Great. They're pretty much down at the COVID level low. So it would be interesting to see. I made videos in the past about Carnival Cruise and how you have to pay attention to the value destruction that's occurred on the balance sheet. Now, the more recent video I made was when it was actually now a lot lower as an update video. So a lot of those risks, a lot of people were thinking that around here. And I remember there were actually large channels talking about Carnival Cruise saying it's a great buy, or they were buying it around there or around here, wherever, but they were buying it at higher prices. And they were basically saying that it's going to recover, not understanding that there was a lot of things to kind of look out for, that it won't necessarily, doesn't mean that it's going to go up to here. Right. And I actually received a huge criticism, which was really interesting, about this stock. Cause I mentioned that, you got to be careful with that thought process that a stock will recover. And he says, no, you had to look at market cap. And I was like, wait, that makes no sense. The investor, from my example, the investor doesn't care about the market cap. You didn't benefit that the market cap has recovered. I I was talking about the stock price, right? Because exactly, the market cap has more or less somewhat recovered, but the stock price hasn't. So you bought the stock. If you bought the stock around here, did you care that the market cap is back to where it is? No, you don't. You're still down. Let's click there, whatever. You're still down 89%. You still got wiped out. Yeah. But yeah, so just a little tidbit there. But have you been putting text versions of your videos? Have you thought about putting text versions of the videos you do? It might help save some time. Cannot watch longer videos. Easier to search. Text versions. Okay, I'll think about that. Heck yeah. Any way that makes my content easier to distribute, why not? Why? And if it's really just an add-on of a software, so text version, text software, I'll put that down on my list of things to kind of look out for. If you guys actually want that, why not? Right? Why not? Soon. I've been incredibly busy like the past couple weeks, and I just finished my last project here at my former employer now, and so we're kind of just on the chill mode for the next couple weeks. All right. So how do you think about shorting oil as the economy rolls over into recession? Not for me. Not for me, but I can understand why someone would want to do that and the strategy behind it, but not for me. I remember I love to have more relaxed approach to investing. I'm very mellow guy. I'm a very mellow guy. I'm very long to. I have a very long fuse. if you know me in person, I have a very long fuse. And then also with investing and everything's very calm, very calm. I don't like to do things or I do strategies that cause any form of stress. Quality of life is priority. And yes, so primarily my strategies are long positions, avoiding positions if I don't like them, but not necessarily shorting them. May sometimes, in rare instances, perform a short. There's the one thing, because remember, my portfolio does not show options. I don't have options on there because I don't want to promote that in any case. I do videos about them, and you'll see a video, and then in that instance, I show like the trade, and I do so in a form to try to use it as a case study. So there's, I think, 2 options videos on the channel in which I showed me performing 2 sales of call options. But that's about it. And I also don't show these other weird little strategies on the side because they're not really stocks. They're not stocks. So it's not part of that. And because I always disclose that portfolio is only long publicly traded stocks, and that's it. So with that being said, where I was going with that is there's technically one position I do have that is a short position that I'm basically closing off in the next couple days. I'm probably going to close it off on Monday. That's performed pretty well, and I don't know if I should even talk about it. But anyways, the answer is yes. In some instances, I do. Hey, thanks, Noam. Shout out to you, Noam. What is my absolute gulp price or gargle price or whatever, however you guys want to say it? Oh, and I accidentally skipped some freaking questions. I apologize. So for Google, I'd honestly say like going absolute nuts with it would be, closer to $1,000. Going absolutely nuts. Will I get that? No, probably not. The market would not. See, the thing with Google is known to the market as a fantastic company. It's known, like Visa, MasterCard. These are known. It's not a secret. I'm not a genius. I'm not like some, whoa, he thought of Google. Google's a wonderful company. No one knew that. No, the whole market knows that. So the scenarios in which you get Google at these fantastic prices, not going to happen. You might get that at fair prices. And then that's where, Buffett's metaphor or analogy or statement, buy great companies at fair prices. So I think right now it's at a fair price. Fair price. It's not like at an exciting price. But to answer your question, yeah, closer to $1,000 would be like, I'm going nuts, but will I get it? No, probably not. I'd be very surprised. If I get it under, I'd probably start accumulating more under 2,000, start ruining my cost basis if I do that, but whatever. That's more of like a mental thing than anything. Ideal nibble range for AMD. I'd have to refer to my AMD video. See, it's after making so much content, you do forget what you say, which is human and normal, unless I have to write it down. But I forget what I said in the AMD video, but I'd probably stick behind what it was there. So I refer to you to my AMD videos, Ethan. And I did skip some of these. Do you typically look at percentages of stocks owned by insiders? Depends, but yes, it is one of the factors I will look at. But it depends, because I just showed you a case study of a company that looks very good on all things. And especially if you look at insider ownership, you're like, oh my gosh, insider ownership is amazing. Oh my gosh, they have so much cash. They have no debt. All this is great. Micro cap. Oh my gosh, all stars are aligned. I'm going to be rich. And then, you need to pay attention to management, right? They have a lot of control over it. That can also be a bad thing, Okay, so we can hear the thunder. Absolutely. So what do you think about long gold miners towards the Fed put? Look, not really my thing. I got to be honest with materials like gold, not my strength. So gold, yeah, I'd have to say that would not necessarily be a question that I could answer. Okay. Because my opinion is probably going to be absolute garbage on that. But I collect gold as kind of like fun, similar to how I buy watches. I like gold, silver, precious metals, and watches, but more of a fun hobby, not necessarily an investment, right? That's my only exposure to gold. I don't have any. I had, when I buy like a material stock or a specific metal stock, I'll buy one that is broadly diversified. I know that, for example, okay, so the thing is with miners, you have that operational leverage. I know that's the wrong word for it, but operational leverage you have to kind of worry about, right? Because it's not just the metal exposure. So that leverage you have in terms of exposure is good to the upside and to the downside. So you know, it's almost like, for me, if I like gold, I'll just buy the rock. It's not a rock, it's a metal, but we always call it shiny rock as a joke. So I know that some of you might be like, it's not a rock. All right, so that's in. Yes, yes, and you know what? Let's why not pull up the image? Heck, that's so funny. I saw that. So for those of you who don't know, um, the Jeremy financial education was absolutely passively aggressively dissing me Kevin, which I thought was, hilarious. I don't watch Jeremy all that often beyond what in index investing with Cole sends me, because he absolutely loves to kind of torture me at times. So with that being said, I found it really fascinating that he was texting me this morning about it, and saying like he's very passive aggressive. I'm like, what do you mean? And he sent me the thing. I was like, wow. And so apparently he had this image up, and I'll show. Let's share the screen. So this is what it was, and let me actually zoom in. Oh, I can't zoom any further than that. But this is what it was, and you can see a reminder text to send Kevin for the 7th time. Can you please pay Graham, Andre, the 14,000, blah, blah, blah. So you guys can read it there. You guys have probably seen this for yourselves. And with that, I was like, dang, okay, that was not an accident. You totally did that. And I didn't watch the video for myself, but I imagine you guys can watch it and give your own thoughts on it. Any thoughts about FLGT? Anything about it? Everyone thinks it's a COVID play, but they have a huge cash pile. FLGT. Why have I heard this one? FLGT. Fusion Genetics. Okay, it's one of these biotechs. Okay, immediately I'm just gonna say market's screaming to me value trap here. Yeah, value trap here. It's trading at a 3.75 PE ratio. If retail's like foaming at the mouth about this, I mean, maybe there's something there, but I'd have to look into it and probably not going to like it. On gene editing company CRISPR Therapeutics, I mean, you want some exposure to CRISPR technology, but less risk. There's also like companies, not an endorsement, but Vertex Pharmaceuticals has exposure to CRISPR technologies, and yeah, but again, with that kind of stuff, you're kind of on the quote unquote cutting edge. Like, retail investors, do you belong there? Do you need to invest yourself there to become rich and wealthy and happy? What are you more likely to do? You're more likely to pick the wrong one. But yeah, could be good. I don't know. Looking, yeah, I can see here. They have beef. Yes. Applied Materials looks good. Yeah, looks good. Amat, yeah. Questions. By the way, I apologize if I skip over a question. It's it keeps taking me down to the bottom, so then it just makes me like go bloop, and then it's a pain to like keep going back up, and I just want to get through it. I will try to get through as many. All right, suggestion: apart from Q&A streams, make videos with several questions collected from the community, probably upvoted ones. What do you think? Yeah, absolutely. No, absolutely. So if there's like a lot of questions, for example, you go on the Discord and you apply your question to like the video request part, and then it gets a lot of upvotes. Yeah, we can do that. Of course I can do that. That's fine. I don't really mind. Okay, so start position. Oh, well, I'm a pretty calm dude, Andy. I mean, anyone out there, you guys can come on to the channel. Of course, we have to do it in a very organized fashion, But anyone's available to come on for, either discussion, debate, you disagree with me on something, absolutely, you guys can come on. Just email, and then I'd have to look, like, as the channel grows, it's going to get harder and harder and harder to do so. But if I'm available and all that, you know, just so you know, the subscriber who came on, and he's come on twice, he's done so because he's one of the only ones who's really asked, right? He totally paid me $40,000 per second. So, you know, if you have the funds to pay me 40,000 per second, you can come on, right? If you guys can tell I'm joking, but all right. But yeah, in all honesty, yeah, all well and good. All right. So 4 months ago, you valued Crocs at above 56. Going into a possible recession, is Crocs still attractive? Not for me, but Crocs looks cheap because the market's probably not the market. Investors are also maybe assuming that it continues to some degree in terms of its business operations. So yeah, I I'd have to do an update. There was someone who requested an update actually recently, so I'd probably do an update pretty soon. All right, I'll tell you that. I'll do an update pretty soon. And yeah, there were some things like I said in the last video. I said Crocs looks cheap. It does, objectively, it looks cheap, but you can't just go just off of that, right? We have to do more. We have to go beyond this. The valuation is just now one part. And then we have to go beyond that and say, okay, well, what's going on here? The market just doesn't give us sometimes these things for free. There's always something, right? And there is. And also, I'll be honest, for me, that kind of stuff, I don't understand consumer trends in fashion. Not for me. Okay, so I know it was kicking someone are down. I know it's kicking someone when they are down, but Jeremy is down 1.4 million and on his larger stock positions cost basis of 2.2 million. Wow. That's insane. That is insane. That is insane. Oh, so this one actually, Falco, you heard when it was, so you probably saw the evolution of it. So keep in mind when the portfolio was shown, because remember, speculative positions can transition over to non-speculative positions. It was a speculative position because of the quote unquote, and I'm using the word wrong, incorrectly, merger arbitrage. Merger arbitrage. So the word arbitrage technically being used incorrectly there, but in the, I guess, the street language or the street lingo, they actually do use it in that form or capacity. So, you know, sue me, bro. I'm saying it that way. So merger arbitrage, there was a merger between them and Lockheed Martin, where Lockheed Martin was going to purchase the company for about 50 something dollars a share. I forget now. It's like $52 a share, something like that. And so at the time, speculation that went away. All right. Now look at it differently and then acquired more of it, non-speculation. So that's why. Right. And I like the company overall. There's a lot of little neat things about the company. They control about 70% of the rockets, blah, blah, blah. Oh my gosh. Specifically for military use. So that's like their market share right now, about 70-ish%. And there's a lot of other nice things that they're under development in the company, but it's not going to be like my main core holding by any stretch of the imagination. But that, hopefully that answers your question there. So that's what the evolution was. So just remember, like, that more than definitely can happen. So, you know, don't be surprised if Zillow makes it into a non-speculative holding in the future. It could happen, right? Could happen. Just like I'm not how do I say? I don't deal in absolutes. Like, things aren't stagnant. I think stagnation is bad, right? So we have to be able to adapt. Voyager suspended withdrawals today. Boom. It happened. Thank you for letting me know. All right. So, because people said that would never happen. Never, ever happen. Boom. I'm going to go and I don't want to, I'm going to see if I can try to blur out his name. But if you go to my Voyager Digital video, there's a comment that said that would never happen. And now it happened. But I said, I hope to them, I hope it does not happen. So I don't want to make it sound like I was very happy by that. I'm not happy because I know that a lot of people are going to be they're going to be sweating bullets. They're going to be sweating bullets. And a lot of members in the community who messaged me saying that they got their money out. I'm very happy for you. I posted one of your messages. If you're listening, you know who you are. Your message was posted. I asked you for permission first, that if I could post your message, because, you know, if anything, other people can see that and maybe someone sees it who hasn't done that yet. And then it brings about the question, maybe they got their money out in time too. So now, if your money's still in it, I hope you don't lose all your money in it. Okay. I hope you don't. So yeah. Let's see here. If I can't blur out their name, because I don't want to look like I'm bullying someone, I'm not going to show it, but technically you guys can, you know, have at it and find it yourselves, but you know, nothing's stopping you. Let me see. Okay, so I'm gonna try to zoom. Oh no, it doesn't. All right, cool. So just I can't. All right. So anyway, someone commented saying, I had never had trouble liquidating my funds and getting them transferred back into my bank account. Well, apparently, from what you're telling me now, because I did respond, this was my response. I said, you may not have, but they have the ability to do so. I did warn the individual. I, I was very clear, and this is actually, by the way, if you're watching, we're like, why were you so um, blah blah blah, or critical of the guys having the affiliate links in their description? Is because, like, for example, if I would ever to do a partnership of some sorts, I have to understand what it is that I'm actually portraying. I think that is a responsibility of everyone, right? And I don't say that you're free of responsibility. You are putting it down there, so you must know the product, right? You have to know the product. And so the product was, and the encouragement was, to put your money into that account and generate 9%. Implicitly, with what you're saying with that, if you don't address the risks, for example, if you don't say, and very clearly, very distinctly, you can lose absolutely everything, because like when you go to a bank, for example, and they give you all these products, they have to tell you this is not insured, this is insured, etc., back and forth. And so they have to make those disclosures. They didn't, right? And they just said, here's the link, you make 9%, they get their cut, and that's all well and good. So now all these people who are, making this 9%, which, by the way, that should have been a cue to begin with. I know a lot of you are adults, and a lot of you didn't think that way. And a lot of you were like, that's something's wrong there. Good for you. But a lot of people didn't. And so they put a lot of their money, maybe they use it as their savings account. Now they potentially are going to get wiped out, which is very unfortunate. And so, again, I have nothing but sympathy for this person who I have no idea if they got their money out, but I did say, you may not have, but you have the ability to do so. Depends on what's going on with your deposit of assets as per terms and conditions. So fair warning that they can do that, right? They haven't done it yet. They can do it. So if they've done it now, I hope that guy got his money out. I hope he did. All right. So thoughts on this company. Okay. Oh, there it was. Lennox International. Okay, so climate control products. Oh, one of these boring businesses. I like boring businesses. Okay, so size. So is this like a carry? Oh, wow. So they basically corrected all the way back down, but they had a little nice pop today. Sorry, not today. Not today. Moderate pop. I got confused with the max right there, but let's see here. No, they had a nice little pop more recently, is what I meant. 13.69%. Wow. Okay. I might look at this one because I like the boring business. This one, if I do a video on it, won't get any views. But again, that's not really the point. All right. So I like boring businesses. Here we go. So you see, I was finding one to go with Carrier. Now I have one. Thank you. So reminding me that Lennox International is a publicly traded company. Boom. Here we go. So that one's going to be done with. I love the new name that just popped in, Amber Turd. This one's going to be done with Carrier. So yeah, Carrier has a buddy there, and I'll do that. So Crocs has a moat. Probably not. Leggett and Platt video is coming. Thoughts on Altria cigarette company, recent, crap going on with the Juul. So probably the rest of the investment's going to be written down, if not a good portion of it. They've written down most of it already. I think they invested like 12 billion. Let me actually find that story. Altria buys Juul for 12.8 billion. Boom. All right. So 12.8 billion. And I think they wrote it down all the way for, I think it's like 1 billion, something like that. The company's still losing money too. This .com bubble is version V2. Most cryptocurrencies will go to zero. Yes, absolutely. Finance classes wonder why we're too stupid to realize JPEG selling for millions was the top. Yes, Nash. Yeah, you're yes, exactly. In my Lafufu Stonk spreadsheet, the ones of VT versus Stonks, he is down 1.7 million. Wow, that's. I mean, I don't want to say like rejoice for someone losing money, but So, man, welcome to the community. But I will never pay for anyone's courses. Patreon, however, I will support your channel by watching ads. Absolutely. There you go. Cool. No. By the way, there's no Patreon. There's no courses either. So, but we are sponsored by the IRS. So please check out our sponsor and be sure to pay your taxes. and then I get a cut of your taxes. That's how that works. So the IRS link is in the description. No, there's no link. Anyone who fell for that, grow up. But anyways, can you imagine being sponsored by the IRS? Just like, hey, check out our sponsor down below. It's the Internal Revenue Service, the most like badass sponsor. All right. So, but yeah, welcome to the community. Hope you enjoy every single video. Yeah. All right. So your nibble prices levels for Airbnb, maybe stocks like Zim. Okay. So I actually read an interesting article that one of you actually sent to me, which was going over the actual problems going on with the shipping industry, to the benefit of the shippers right now. And Zim and DAC look to benefit from it. So that's what I think. There is, let me tell you, Andy, if you're in the Discord, there is someone in the Discord who's an absolute monster at analyzing these things. Okay. So absolute monster. I would say almost like they're definitely like the one to go for if you want any information on that kind of stuff, like monstrous information. So yeah. And by the way, for anyone's wondering, Discord's free. The Discord to join is free. So under inventory build. Okay, so but yeah. So someone's already answering this right here. Inventory build up, and you see. So, but this is like on the risk side. So there's other stuff going on. It's a complicated business, right? It's a complicated business. So yeah. Yeah, and yeah. Okay, so he already called you. He doxed one of the goats for oil. So yes. Lovesac is boring. Ticker symbol love, and I haven't looked at Lovesac honestly. A lot of these. Look, a lot of these. Let me see if I remember Lovesac. Love. Let me pull them up here. Yeah, because these furniture companies, sometimes they're like, eh. So I'd probably take a look at Lovesac. Oh, actually, no, Lovesac's on the list. Lovesac's actually coming up soon. Lovesac's not too far away. By the way, if you guys are wondering, there is 126 stocks on the list. Individual stocks. So some of these get requested more than once, and I try yeah, like just wrap your head around that. So I will never run out of content to make. I just go onto this list and I go, okay, which one will I do? And then sometimes some of them will take longer to make than others because obviously different cones. But yeah, keep an eye. And name dropping other people. Yeah, I see people are name dropping some of the members. Yeah, so they're getting name dropped here. But yes, we have some people in the Discord who I would say are very, very knowledgeable. And there's even like they like, there's a lot of people who like to talk about it. Anyways, a humble goat. All right, so HHH, wash hands. I don't know what that means, but I guess cleanness, something about cleanness. Victoria's Secret has nice DD. No, I have not looked at Tridex. No, I haven't yet. But Tridex, I just added it to the list. But it is a REIT. It is a REIT in the UK, I'm guessing. Yep, PLC. It's in the UK. Okay, so capital mindset. What is the edge? What is edge computing? I remember this high flying stock, Fastly. Yeah. So edge computing is one form. So it's lamest terms. Let's always explain things in lamest terms because not like a dedicated video to like people who and I don't work in that industry. So so you understand. But edge computing, how I would explain it to another person, so where they can kind of go, okay, I understand, is there. So there's a CDN, right? Closed delivery network or closed delivery nodes, whatever. But a CDN is something where you can basically have like a little secure network, and it could be used for there's a variety of use cases. Let me just say that there's a variety of use cases, but what you want to think of is another kind of more tight-knit internet. So one company that does a good job of explaining, maybe not unlike Fastly, because I think Fastly tries their best and does a good job, is look up Cloudflare. Cloudflare in their presentations and when their CEO talks, he actually does a really good job at explaining to the newer person kind of coming into this and saying, okay, what do we do? How can you kind of think about us? Both of them are high flying stocks. Fastly and Cloudflare, at the time when you compared them, you could have actually identified that Cloudflare was quote unquote the superior company based on their operational metrics, such as their operational margins relative to something like Fastly. But they're very different in their own respects. They have different products. Well, they compete. They're very competitive, but they have different products. Cloudflare also has a cybersecurity part of their company. You also have Ford. I'll name drop a lot of companies here for you that if you're interested in kind of expanding into this area. Well, you have Fortinet. Fortinet's another one. You also have kind of unconventional ones like Twilio. Twilio is actually has capabilities in this front. You also have a REIT that has capabilities to kind of over branch in here, and that is EQIX is the ticker. I can't pronounce it. Equinix, EQIX. That's a REIT, but that's a REIT. That's kind of separate. And then another one, oh gosh, Akami. I think it's Akami. It's a Japanese one. They're like the king of this CDN thing. They've been in the game for quite some time. You have I mentioned Cloudflare already, obviously, Fastly already. Fortinet, I already mentioned them. I'm guaranteed I'm missing a couple here, but there's a lot. There's a lot. And yeah, even in their investor presentations, CEO interviews, you're going to get a really good introduction to that, better than me. Okay, first of all, because they work in that, and they're not from what I've seen all the times way back when, they're not bad at explaining it. They're not, right? Pretty easy. Okay. If you had to buy any ETFs, which ones would woke you choose? Woke. No, I'm just messing with you. But the probably okay. So the S&P 500 is one that people kind of just flock to, but S&P 500 is a bet basically in the United States, but I also disagree with that statement too, because a lot of the American companies are global companies now. They're not even American companies anymore, but people still say they're American companies. Like, I would not say Google is an American company, even though it's headquartered here, it was made here. I almost look at it like a global company, although I understand what some people might mean by American company. I'm just saying, like, a lot of these companies operate in the world. So, they're like globally operated companies. Let's just say that, okay? And Facebook, for example. So you get a lot of that exposure in the S&P 500 that, and then some people might say, these index funds that have broadly diversification in the total world, they give you that international exposure. Well, I agree with that. I want to just then highlight the S&P 500 still, technically speaking, gives you that international exposure indirectly in a different way, but you have to worry about relative valuation. So stocks that are international, relative valuations to domestic stocks, etc. Right? Because that actually has, it has factors in there too. Okay, so I did not buy the dip on Zim. No, I did not. So I answered your question there. So if you were wondering, Can you do a video series on valuation methods, DCF, relative valuation? Yes, of course, of course. So you know what I'm preparing? This is actually what I'm preparing, Nash. I'm actually preparing to do reaction videos to him, and then I'm basically like the guy who's there for people who are deaf, kind of like the sign language guy. Well, I'm going to be that, but just like for layman's explanations. So I'm going to do videos with his presentations, and then layman's explanations, I'll do like a pause and then do it like that. Because I think like I want to do value added, because technically speaking, like the content's out there, and then I just want to do my value added portion, right, to it. So value added, just do a video with him there, and you hear it from the horse's mouth. We pause, we talk about it, break it down, continue the video, and then go that way, and then little chapters here and there. So it kind of gives people like the breakdown, like they don't have to listen to me, they can just go straight to the horse's mouth, and then nothing is like repeated, and I'm not doing anything like necessary repetition wise, just kind of value added, and that's it, right? So I'm going to be doing that. Okay, yeah, we can pull it up. Let's do it. So tattooedchef.com. Why did Google like remember that or recommend that when I put it like new? Do I visit Tattooed Chef a lot? I don't remember. Maybe I do. Maybe I'm a closeted Tattoo check. You know what's funny is when I go on strongmans, a lot of you people, not you people, a lot of you people, a lot of people think, because I have a Tesla or whatever, that I'm like a certain way, and I'm like, geez, like if only people knew. It's like my friends think it's hilarious, by the way, but and like I eat tattooed chef, and I was like, bro. All right, SEC filings. Let's see here. Okay, quarterly report. Let's go here. Let's look at the most recent balance sheet. Let's look at the balance sheets, guys. The balance sheets. And remember, the way we calculate PE is you take earnings divided by price, guys. Where did you hear that from? Sorry, I just had to. Share screen. Let's go here. Boom. Tattooed chef, right? Tattooed chef. So let's go through it. All right. All right. So what do they have cash on hand? They have 57 million. And back in the day, just to highlight, the people were touting like, oh my gosh, they have $100 million in cash on hand. And this was actually, you see, oh my gosh, I just have to highlight. Dom is saying exactly what I was talking about. Yeah, just like that. That's what people were saying. All right. Anyways, going to the balance sheet or balance sheets. Back in the day, they were like saying, "Oh, 100 million in cash, bullish. They're never going to have to dilute." That's actually what people were saying. And even in some of the videos I made on the channel about Tattooed Chef, those were some of the comments we would get. It was like, there's no need to dilute. They're going to be like cash flow positive. Blah 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 blah. Oh gosh, that's good. That's like gonna be kind of inside joke there, but all right. Anyways, cash, accounts receivable, inventory, all that jazz, blah blah blah, or whatever. Okay, this is where I was looking. So line of credit. I mean, it's nothing really. Accounts payable. I mean, that's just for running their business. Accrued expenses. So they're not really going to take on any debt. And actually, you would learn this in one of probably your a capital markets course or anything like that. But just to break it down, an early stage company shouldn't be utilizing debt, right? Shouldn't be utilizing debt if they can't help it, because debt's probably going to be very expensive, right? Right now they're burning cash. It's actually better for them to utilize shares outstanding, not shares outstanding, sorry, issue common stock, right? So raising capital in that way in order to actually get capital to fund the business in the future. So that's why a lot of them do it, because there's a difference in contractual arrangements versus stock. So one of the biggest differences is in a contractual arrangement, you have stipulations on time frame, and with that, let's break that down, right? So stipulations on time frame, what does that mean? Well, by a certain time period, you have to do certain things, right? You have to pay money, you have to pay interest, you have to make payments, right? But with common stock, you're giving up future equity, not future equity. You are giving up future earnings, right? The ownership of earnings, you're giving that up. So, but there's no stipulation on time frame. You can go 100 years and not ever pay out any cash flows, right? Technically speaking, you are giving up ownership in terms of the assets. So that's what you get in return versus a contractual arrangement. And so in early stage companies, that's beneficial because there's not cash leaving the business and not taking away from investments necessary in operations. So for anyone wondering, because I had to make videos or say this many times in videos to correct bad information out there, is that if you are looking at it from the standpoint of, okay, the business has a lot of cash, it's not going to dilute. Wrong. Or the business is cash flow positive, it's not going to dilute. Wrong. It's about utilizing the most appropriate form of capital raise at any given point in time. So yeah. Okay. Oh yeah, guys. You even woke, bro? No, I don't use leveraged ETFs, except in one case that I did. But I haven't talked about it yet. I kind of just reference it as the one. It's a position that I'm not going to really get into. But if you guys really want me to say it, I can say which one it was. I have actually featured it in one live stream in the past, and I gave hints at it, but I never like said definitively to anyone. Right? It was like plausible deniability or not really, because I don't want to highlight that stuff. But yeah. Anyways, EP. Did I skip any questions? Oh, I did skip over this one. And I skipped over this one. Do I listen to any music? Yes, I do. I only listen really to music when I'm working out, when I'm running. I like to actually run at night. I'm that kind of guy. I'm that kind of creep you just see outside and you see like the shadow just like running. That's me. No, but in all seriousness, I don't know. For me, it's better at nighttime, like when the sun's kind of down. I can do for more. I can do for longer. I think everyone is that. There actually, I think runners out there, you guys can say that. There's a term for that. I'm pretty sure that's pretty common. That at some certain time period, you're actually a little bit better. And then when the sun's like obviously high up, especially where I live, it's gonna murder you. But yeah, when you make it, would you like to try your hand at venture capital or any other? Yeah, absolutely. No, like, okay, so like in my youth, like right now, because I'm in my youth, trying to build out skills, necessary skills, get all these experiences, and then kind of build out again my portfolio of abilities, right? Improve upon them, figure it out, or in a professional setting, and try to get all this exposure. So I'm going to my next job, get exposure in particular aspects of my desired end goal, right? It's all part of my end plan. Okay. So that's, I think, what you should do when you're young, right? When you're young, you should be going out trying to build these skills, and then when you're older, you bear the fruits of that. Because when you're young, there's a lot of potential. You're just a bundle of potential, right? When you're young, so you study. For me, it was study, graduate with zero debt whatsoever. In fact, got paid to go to school. So you get paid to go to school, graduate with zero debts whatsoever. Then go into respective fields, get experience, internships, etc. Build a portfolio. When I say portfolio, I mean your skills, your brain. Build that portfolio up, and keep going. You don't know what you're going to do along the way. You don't know if you're going to start a business, but it's all like just relax, go with the flow for me. And then, well, not relax, but you know what I mean. Just like kind of just see what happens, and then just have a general direction and go for it. And then, yeah, so no, not saying no to that, but it's not like right now my goal. All right, so the Fabio the super lib. Were you even woke? All the jokes. Subscribe to this man. Okay, yeah, subscribe to me, bro. Let's see here. Elemental HGG. Okay, by the way, do you believe in? Yeah, okay. So there are some clouds ahead, some stormy clouds ahead, but no, I do believe that there's potential. So it's not going to be the size of Alphabet. I want everyone to be very clear about that. The size of Alphabet, it will not be. A little bit of Yoda speak, but yes. And I know Julius is making that joke because for those of you who know why this joke is there, yeah. My boss right now, like the new boss, if she's watching, she would see that and she's gonna laugh, Julius. So I'm gonna keep that up there and just say, for you, if you're watching, there you go. That's the joke, because she knows too, because that story I told Julius is she was there, so she also thought it was funny when that guy said that. But anyways, they're woke, be sincere. Cash is trash, bearish on TTCF. No, cash is trash. You must put all the cash into TTCF. That's how you can generate those returns, man. Those returns. You make some money. Make some monies. All right. So capital mindset. What's going on with the balance sheet of SGHC? Q1, they added earnout and warrant liabilities issued and purchased a massive amount of shares, share-based compensation. Probably. Let me pull up SGHC stock. Oof. What is let's go here. Let's see this. Kind of remember this kind of company. Okay, so if it's a good case study, founded in 2020. Is this true? Founded in 2020. What? Yeah, what the heck? Super Group. Okay, so Borgie Cup, Miami Heat, Philadelphia. I never even heard of this company. Incredible. All right, so maybe this is a good case study. Huh. Maybe I add this into a group of stocks that I cover, and then I do a big video. Because do you guys like the bigger videos where it's like more stocks in one video than just one stock per video, and just having stupid amounts of videos? It's easier for me. I don't know about you guys, but it's a lot easier for me to do those videos because less thumbnails. Because I told you, the thumbnails is what takes me forever. The videos themselves, I do like 99.99%. Let's okay, more realistic. 90% are off the cuff, right? Off the cuff kind of videos. So I just give my opinion, and then we kind of go through things, we walk through things, and yeah. So the longest part for me is what takes is the thumbnails, believe it or not. So yeah. Are you looking to move into joint credit? Seems that institutions flocking into bonds and spreads are widening as a result. Big concerning for equities. Hardly a vote of confidence in the Fed. Nash, because I think aren't you Snyder pilled? Aren't you Snyder pilled? I think you're Snyder pilled, right? Yeah, it should be a little bit of a concern. If you're Snyder pilled, yeah, you know. So I gotta say, I would be lying if I wasn't, but not like entirely. No, I'm kind of just either kind of mainly just sticking to my cash. Of course, I wanted to be like bond investors. I have a great appreciation for them, right? But that's not me. I'm not that guy, right? I'm not that guy. The word woke makes me want to inflict pain on small. Whoa. um, Ocean Powered Technology, OPTT. OPTT stock. I imagine, okay, Ocean Power Technologies. Oh, it's $31 million market cap. Oh, yeah. Oh, my God. Yeah. I showed one that was probably even more horrendous. And I bet you it's more horrendous. Yeah, yeah. Way more horrendous. I showed this when we did that Discord call. And some of you were like, what the heck? Yeah. So uh, I'm, I, I can't even say the name. Someone might mention it in the comments, but I can't say the name because it's really tiny, really, really tiny. So I'm not even going to. Uh, but if someone wants to, who was in that and it feels comfortable saying it, you guys can say it. Yeah, I died during the day. Um, I don't know. Maybe I'd have to really look at that. MG stock. I forget what this one is. Mistras Group. Mistras Group. Why'd you buy Mistras? Interesting. Oh, that's probably not the same. Okay, no, this is definitely not the stock. I was like, you did not buy this at like 70.65. This is trading at $6. You're probably talking about another stock. Talking about another stock, right? All right. So, or you meant 7 something and not 70 something. Florida trying to fry running. Yeah, during the day. EIM emo. Absolutely. Thanks for all the videos. Super valuable. What's your thoughts on Zim? If you already answered that, sorry, I will search back. So no, I can answer it again. So I don't know enough about the shipping container industry. So like inventory levels are a bit of concern, but simultaneously there's a lot of tailwinds because there's a lot of problems with getting shipping containers up and running. Or just ports in general, just massive international problems, right? So they have that going for them, but then they also have inventory levels have been piling up and piling up and piling up. And then if we're going into a slowdown, there you go. But so my answer is, I don't know, staying away from it, but I'm cheering you on if you buy it, cheering you on. And there's some people in the Discord community that absolutely are into that and do a lot of research and are very deep into that. They're probably going to be way better to ask than I am. Okay. Way better. Okay, so Katamasa, do you think of Chuck Arrow has a 3-leg stool approach to investing? I can probably do a video on that, but yeah, I mean, there's so many different strategies, and you might say that's a better form of strategy for me. I like it. I like whatever strategy keeps you in the game and keeps you focused, keeps you excited, keeps you constantly wanting to learn. And because if you're gonna do this yourself, if you invest yourself, you have to have that mindset. You always need to learn more and more and more and more and more and more and more. It's never gonna stop. Never, never, never. You're gonna be 60 years old. You're gonna still be learning. You're a student when you start. You're a student when you die. Right? You're still always a student. I know you're laughing because I highlighted the asset management, bruh. By the way, I wish to buy your super chat. Google won't let you purchase it from the foreign country. So much love from Israel. Hey, no worries, man. No worries, man. Just fact you're here and stuff. Great, cool. That's enough. All right. So after 3 years of watching financial YouTubers, I think you're literally the best. Oh, thank you. You see, that means a lot. That's a form of payment. That's a form of feel good payment. You make me feel good that way. Boost my ego. Tell me I'm awesome. You know, tell me you'd kill for me. Right? No, I'm kidding. All I do is I mass text a name. You know what to do. Okay. You know what to do. FBI just knocks down my door. Just like, you know, what did you say live? You just admitted, but I'm just kidding. We're not building a cult here. We're not building a cult here. Are we? Are we, guys? Would poll question? Would you do it for me? You know what I mean. I'm joking, of course, but all right. Would you consider yourself more of a brandy? Oh my gosh. I don't even know what either one means. Like, what does it entail? uh, I don't know, man. Very funny question. Uh, oh gosh. Oh gosh. Anyways, got to leave early. Time to swim. Yeah. Oh, I love swimming. I like to go to the gym and with my swim shorts, and right after I work out, I go swimming because the gym has a pool. So good on swimming, fellow swimmer. Awesome. Hey yo, Ricky. I don't know. Yeah, because that was a crazy comment. Um, we prefer. Okay, good. So I like that. For me, I love it. I prefer that so much better, and then it helps me get through. Dude, guys, over 100 stock requests is a lot, and it's almost like paralysis. I look at, I'm just like, oh my gosh, which ones do I pick? That's why I do the votes occasionally in the Discord, because I'm just like, which ones do I pick? I have no idea. This is insane. And then I also will count like updates, well, no, sorry, the 126 doesn't include updates. Those are new ones I have not covered yet. Right, to give you an idea, it's like, it's incredible. And a lot of them, you know, it's, again, because I don't care if they don't get views or not, a lot of them will not get views. It's all about just you know, racking up that content log, right? Just having that an entirety. Okay, so come on, is it how bad does it have to get to buy stocks like Microsoft, Adobe, Microsoft again, MasterCard, bleh, Visa, Johnson & Johnson? Pretty freaking bad, man. Are you kidding me? Because the market has identified all of those companies as fantastic companies. The one that trades the cheapest, I think, is Johnson & Johnson, of the ones you laid out off the top of my head. I think Johnson & Johnson sitting at a 17, 15 PE, around there. Let me actually check. J&J. Always, it usually like trades around there. Oh gosh, no, 24. I was way off. What the heck? Johnson & Johnson. Oh my. So they're all trading at these high rates now. Jeez. Okay, was wrong. But anyway, pretty bad probably, because again, I know Johnson & Johnson's splitting off their consumer division, so there's that. Looking forward to that maybe. Looking through this. Okay. No, I do not. Look, if it's a YouTube I'm newer to this YouTube thing. Like, I'm finding out all these people, and dude, there's so many characters here on the internet. It's absolutely incredible. Remember, like Capital Mindset was almost started like as a push. It was pushed to start, and then wasn't really familiar with the YouTube finance space. It again, the friend who I started it with, he was more familiar with the YouTube finance space than I, and then it was just like ongoing. And you know, some of you out there who are watching, Cole, if you're out there, you know, you do this to me. You like to push it out. By the way, you guys can request me to react to people that I've never heard of. So I still haven't reacted, like Stock Mo. He's on the list of requests. There's a lot of them out there that are listed to request. And like portfolio reviews, I'll do all of them, because you know, it's also like, if you guys want to see me cringe, fine. I'll make the content for fun, and maybe though, you can find like kernels of little interesting tidbits here and case studies here, like Joseph Carlson being a case study of a story-driven investor, like a pure extremist story-driven investor. Paul being a pure extremist fundamentals investor. So, well, to some extent, but yeah. Okay. I'm a student of finance. When I start, I will be a student of finance when I die. Master of finance when he started. Yeah. Elemental. Yeah, those are funny. That's a funny comment. Voyager just died, I guess. Yeah. Yeah. um, let's not go there. I don't know what we're going where. Emmanuel Finance went AWOL. Emmanuel Finance. Who are these people? See, look, okay, Stockmo. Well, okay. Oh, I just saw someone else's question. So this one, well, is he a perma bear? Perma bears are interesting, but they're permanently bearish. They like never change. They're always just like Debbie Downers. And I mean, like, look, I'll be honest. Market goes nowhere, goes down for many years. I'm not really gonna give a shit. It's not really gonna change my lifestyle or anything like that. So it's not really that concerned. I just want my strategy is simple, very brain dead. Some of you might say, acquire assets I like at prices I like. That's it. That's literally it. I don't overcomplicate it beyond that. And that includes like with real estate. When I find a property I like, I'm gonna buy it. I don't care. I really don't care. That's all I'm gonna do. So yeah, there's Rick's in Austin. So Peter Schiff, yeah, I'd say Peter Schiff is probably considered somewhat of a perma bear, but he would argue he's not a perma bear. He would argue that he's a bull in some instances, a bear in some instances. So like, because he's bullish on some European stocks, which I find kind of strange. He's bullish on a lot of European plays, but Europe's in a even worse position in some instances than the United States, depending on what specifically we're talking about. But you know, you know. So yeah, if this guy's a perma bear, then I don't know what to say with that. You hold super stock. You hold super stock. Would you consider buying RH after the last drop? Warren Buffett in it. Oh, sorry. Yeah. Okay. I just saw your new comment. Overstock. So, RH. Last time I checked, RH is like a buyback story. So RH is perpetually, if I'm remembering this one correctly. RH actually fell a lot, right? Recently. Yeah. Just dipped crazily. All right. But it's trading cheap. RH kind of more occupying that premium end of the market. The thing is, I'm not invested in Overstock for, you see, Overstock's in the speculative side of the portfolio. I've kind of explained this in the past, and you might be new and haven't seen that video. So Overstock's in the speculative side of the portfolio because I'm not invested in it for its core business. I'm invested in it for its applications within blockchain, and that's it, right? And I have to be honest with myself, because if you're not honest with yourself, especially when it's your money, your investments, the only one you'll hurt is yourself. So because I identified that within myself, that's why I'm investing for it, it has to go into the speculative bucket. It must remain there. Okay. I'm not investing it for that. So I don't technically look at Overstock as my furniture play, even though it has a furniture business within it, or that's what it is actually. And actually they passively own now those other assets. But RH, I mean, if I bought it, I'd have to be bullish on the furniture business within it and its ability to kind of continually return capital to shareholders for long periods of time. If I remember correctly, this is a serial purchaser of stock, and Buffett loves those. Buffett talks kindly about companies that do that. So let me actually kind of confirm that. Oh, no, not really. No, they're kind of all over the place. Yeah, they're kind of all over the place. So this is not the company I remembered. Oh, wait, no, they were up until the pandemic. Okay, so they were pretty much, they bought back a stupid amount of stock. What the heck? So unless this free resource is wrong, but let me actually show that this is a, what the heck, guys? All right, so let me show you guys this here, and I zoomed in so you guys can kind of see it. So here we go. This is just a free resource I just pulled up, and look, it looks like they issued all these shares, right? And then, all the way down to the pandemic, buying back all these shares, and they basically just burned all your money because what was this? Like literally, why'd you do this? Why'd you do this only to do this? They should have probably focused on capitalizing themselves better. And they probably could have saved shareholder value and not done all this issuance. So I'd probably investigate that. Like, why? Why did they do this? Do they need to do this? Why would the investors do that? So yeah, Michael Burry was in a band. It would be, yeah, 100% it would be. 100% it would be. I like being bearish. Love to see the market burn. This is fake alias. Sorry, not fake alias. Nash, you're the Joker. He's like, it's not about the money. It's about sending a message. Capital Mindset, do you think we will have a long bear market? I have no idea. If we do, I'm going to be doing the exact same thing. I'm just going to be buying assets I like, prices I like, and that's about it. I'm not going to really care about anything. And of course, as long as like I'm in a position where I still make money. By the way, if you guys are curious, I'll let you guys know. Do you guys want to know how much the YouTube thing makes? I can tell you guys. If you guys say yes, I'll say it. All right. I'll tell you how much the YouTube channel makes. I've already shown you guys in the Discord. You guys already know. You guys are gonna be like, yeah, it makes so much money. It makes so much money. It's incredible. It's incredible how much money it makes. But yeah. All right. So great live stream, mate. Unfortunately, I have to leave. Yeah, no worries. Thank you for joining. I'm glad you enjoyed it thus far. And we'll see you next time. Enjoy your weekend. Enjoy your weekend. So can you look at Ann Sherman's stock ticker ANN? Abso-freaking-lutely. Is this a joke? Okay, so let me go back here. I don't know if you're trolling with me here. Ann Summers stock ticker ANN. I'm looking up ANN. Ann Summers. I'm pretty sure this is. There we go. Found it. Ann Summers Ltd. Wait, Ann Summers. Ann Summers. I can't find them. Man, what the heck? It's so weird. Ann Summers. London, founded London. Is it the London-based company? Oh, Julius Caesar is laughing. Therefore, or he's either laughing at Ricky's or he's laughing at what you said. So, okay, we're getting the laugh. So I was about to pull it up. Oh, I see. I see what they sell. Oh, I didn't notice this until now. They also sell some toys. Okay. Okay, yeah, haha. No, it is funny. That's funny. I remember someone had a very creative name, and then they made me say a word almost. All right, so I've been following it here and there a little bit. It's really interesting. So, because Japan is where I think the United States is heading towards more, well, something akin to that. It's going to rhyme with it. It's not going to follow exactly. That would be silly. Yeah. Nash, you did get me. Nash, you did get me. Look at this. Yeah. You guys are great. So now it's here forever. Ann Summers, right? Ann Summers are sponsored in today's video. Ann Summers, everyone. Be sure to check out their products. Uh, use the sailing pitch. Their toys can be used to comfort you in times of distress when you've lost everything. Think of it as Voyager Digital, and it's a symbolic representation of Voyager Digital. Be sure to use checkout code Voyager Digital when you check out. All right. Okay, so and by the way, this guess is sadly close, Ricky. That's sadly close. So, yeah. Capital Mindset, hypothetically, if Amazon would spin off AWS business, would you still hold your share? Yeah. Yes, I would. Absolutely. But I do love it for AWS. I do love it for AWS. So that's all well and cool. All in all, I think, for the next couple days, I'm going to be, next couple weeks, I'm still going to be, same old buying some stocks, but I'm going to be probably buying some. I know Strongman's going to absolutely murder me if he hears this, but I'm going to be buying some dividend stocks, right? I'm just going to be buying because it's not because they pay dividends. It just so happens a lot of them are paying dividends. I try to focus mainly if they are. By the way, if you were wondering, I try my best to kind of allocate it more so to my retirement accounts. But yeah. A lot of Planet 13 to cope. Yeah, true. He's being. I don't think the US will follow Japan. Like, I don't think it's gonna be like an exact Japan 2.0. They're two different situations, right? But it's gonna be like a low growth, same quantitative easing into infinity. and still trying to do that in order to, stimulate growth, but nothing really coming out of it. Not in the exact same policy. So I just got to be very clear with that. How can the U.S. follow Japan when the Japanese are all smarter than us, or U.S. or us? We should get a worse outcome in the crisis because we are dumb and we kind of suck. Well, I mean, except the fact that we're the world reserve currency, which is a big, benefit. But would you ever work? Yeah, absolutely, I would. But for them, well, just so everyone understands, I am actually going to go and get my master's. I'm going to actually get my master's while I'm also working at the next job. But that's going to be starting like next year. I'm going to start that next year, do the weekend classes. I'm going to be doing it in data science. Data science is going to be the master's I'm going to be pursuing. So. But I do think for working at Alhambra Investment Research, not only would YouTube could give a good pedigree as to like thought process, and then I would have to more than likely increase the educational background, just for the, I guess the street cred, not the street cred, the academic cred, whatever. And then from there, yeah, maybe, but it'd be an interesting prospect. I mean, just I plan on having Jeff Snyder in here eventually, but Emil Kalinowski. I mean, if both of you are watching somehow, if any of my subscribers send you this part or this section of the video, but out of respect to them, I'm waiting to the channel to grow and then bring them on and then kind of have them and talk. And I want to break down their concepts in layman's terms. And if they need me to pay them, listen, I'll pay you guys several grand to come on just to talk, or just, yeah, in general, but in general, just pay them random. I didn't mean it like that. Pay them $1,000. Strip for me, Jeff Snyder. Those are for the jokes, guys. Those are for the jokes. Okay, now it's on the internet forever. So, all right. Capital mindset. Japanese yen is dropping like a rock. Their debt is over 266. Sorry, someone's message in just made me laugh too. Their debt is like 260 GBP. They are buying bonds like crazy. Do you think this is sustainable? Look, dude. The thing is, I don't know if this is sustainable because it's all experimental. My feelings and most people's feelings would say it's not sustainable. We have nothing to look back on this. Like this QE to infinity thing, we don't really have something to really look back on this. It's not money printing. Like they're not printing money per se. It's so different, so unique. So I don't know. And I don't think most people, maybe there's someone out there that does, but if they do, probably they don't. And the ending of this story, we'll kind of see him play out. I'm going to be doing what I do, and then that's how I'm going to go about it. But yeah, it could end really badly for all we know. Okay. Please do that. Please. No, seriously, please do that. I think that'll be funny. I don't know if he'd be creeped out and be like, oh my gosh, but yeah. My gosh. So yeah, I can tell, by the way, which ones of you I'm starting to like catch it more and more, the accountant humor. So those of you who've worked in public accounting, I almost can gauge the humorisms that you guys kind of all have. I think it's something you developed or something, because it's very similar, or you're all a group of friends that happen to all follow me. I don't know. And you're part of the community, but I think it's like a bit of both. Maybe you guys maybe became friends on the internet. Okay. So, average Joe investors love dividends. My evidence. Yes, they do. Yes, they do. And like, I don't poo on the dividend investment strategy, as long as whatever investment strategy keeps someone in the game, all well and good. It just so happens a lot of the ones I'm looking at are, dividend payers too. They just happen to have dividends. All right. So, I don't care whether or not they do or don't necessarily. Now, macros concerning me big time. All of the Europe could have be in stagflation if core PCE. Yeah, absolutely. Like I love looking at macro. I love talking about macro. It does affect the general sentiment of my strategy. It doesn't tell me I'm not going to buy anything right now, or I'm going to buy and have no cash on the side at any point in time. Like it doesn't do that for me. But I have I have a great fascination with it. Very entertained by it. Yes. If I had the time, I would also try to get my master's in economics, because that'd be pretty awesome too. But yeah, definitely wouldn't have the time for a PhD in economics. Screw that. I'm not going to be an economist, guys. I want to work for J. Carlson Investments. EBITDA. This is what I'm talking about with that humor. Emil has a great voice. He does, and I'm going to clip. Yeah, do it. Yeah, it is the world's guinea pig for that movement. Capital Mindset, any thoughts about Bed Bath & Beyond, BBY, and Kohl's cases? Okay, so I forget which one. The chairman of GameStop, was it? He bought one of those. He put a lot of money into one of those. I forget which one it is. Let me just find out. So chairman. I love how I put Ryan Cohen. I always forget his name. Ryan Cohen. All right, Ryan Cohen. I love how I typed in chairman. You guys didn't see this, but I typed in chairman, and the first thing that just came up. Google was like Chairman Mao. You mean Chairman Mao? You want to look up Chairman Mao? And I was like, no, different chairman. Ryan Cohen buys share. Oh, it's BBY. There we go. It is BBY. So he put 10% stake in the firm. How much was it? I just want the dollar amount. It was like hundreds of millions of dollars, or $100 million, something like that. I don't know if it was like $120 million, but it was a decent amount. He bought like 10% of the company back in the day. Yeah, it was in March. Wow, 67% drop. That's crazy. All right, so, but to answer your question, these are falling knives right now. These are 100%. They are falling knives. I talked about them in the past, and with BBBY and Kohl's, it's just there might be some value there, like, but it's gonna be very dangerous for a retail investor to be involved with this, to be honest, unless you really understand what the heck's going on here. But let me pull up BBBY. If I remembered correctly, BBBY's balance sheet is kind of meh. There's a lot of, and we were getting into some questions there. I'll pull it up here. Let me go to their SEC filings. No, I'm not here to buy anything. That might be the problem. I'm not here to buy anything. I'm not here to buy anything, guys. That means you should go balls deep and put options on this company, right? You know? Yeah, you know. I see some questions in there that I'm going to get to too. While I'm pulling this up, I'm going to come back to this. Taking too far tomorrow morning. Good luck with that. That's the hardest one, man. I hope you pass. You'll pass. You'll do good. Etsy, Shop, any of the SaaS companies. They're all, I mean, everything can become interesting if it falls fast enough, obviously. But I haven't really looked at any of them. I know Etsy's fallen a drastic amount. Shopify's fallen a drastic amount. So maybe, yeah. No interest in an MBA right now. No, not really for me. Because I don't see a need for it. Right? It's not it's not impending anything. But yeah, I want things that are going to be useful for things I do, things I desire. So data science is more up my stream. I do like data science a lot, and I actually need it. I believe so. No, I don't need the masters, but I would like it a lot. All right, so let me pull up. I'm getting distracted here. Let's go to the SEC filings. It's financial information. There we go. SEC filings. And let's go to the most recent 2022 10Q PDF. Boom. Beautiful. Awesome. Let's go. Balance sheets. Let's zoom in. Share screen. Boom, 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 boom. Share screen. Let's go. All right. So kind of scrolling through this thing. I mean, cash is dropping like a rock. Merchandise inventories. I mean, they're having to keep inventories up. Inventories are pretty much the same from a year ago, or not a year ago. This is the, okay, no, this is from that month to that month. All right, cool. So just making sure. So the change, wow, this change is pretty drastic. Yeah, it's quarter over quarter. All right. So anyways, going down here, other liabilities, long-term debt. Oof. Long-term debt's going up. Cash coming down, long-term debt going up. This is a very leveraged business relative to its size. What's the this market cap, man. Market cap sitting at 300. Yeah, I would stay away from me. Not interested in me. All right. Is perpetual suffering. Yeah. No. I took some extra classes when I was at university, and just just for the heck of it, I went into some of the more advanced econ classes that the university would allow me to go into because I wasn't an econ major. But yeah, and I did so also to get exposure to the professors, so I can talk to the professors and then ask them questions outside of the classroom, read up on papers, etc. That's where you learn a lot. And then the professors themselves, I mean, like I say to everyone, if you're going to university, please use your resources. Please, please, please don't go there and not use the resources there to your advantage. Go talk to the professors, especially if they work in any field. But they almost love it. So like if you talk to professor, then they recommend papers for you to read. You read the papers, you come back to their office hours, you want to have a conversation with them, and they're not a complete dick. They're going to love to talk to you about it, and then you're going to learn a lot from there. Then you can go back and forth. Like it's incredible. And then you have that all that opportunity when you're young and at the university, and people just don't use it. Just don't use it. You hear me rant, I sound like an old man. I wonder what I'm going to be like when I'm 70, just like a grumpy old man, just like the youth, they just squander it. They just squander their resources, man. They have chips built in their head. I don't know what's going to be like when I'm 70. They have chips built in their head. Back in my day, I had to type to get information. I had to use my hands. Now they just think about it. Can you imagine if that's like the future? People are just lazy. They just don't want to think about the information because it's, I don't know, man. That'd be funny. Oh, you meant no. I'm talking about. Oh, sorry. I'll catch up to the comments. Yeah. Negative GDP growth. Exactly. Zasters my asters. What's a gulp price for CRM? I have no idea. I have to actually check out CRM. I probably did a video on CRM. I most likely did. And I probably talked about it there, but yeah. I was also one of the high short interest plays. Well, high short interest plays, maybe high short interest for a reason, guys. Like, they're not complete, absolute idiots, right? So it's probably high short interest for a very good reason. And yeah, probably is. And the Kohl's, I think last time I checked was Kohl's had like a deal. It probably like, let's look up Kohl's stock. But I think the deal did not go through. Kohl's. Yes, I always forget their ticker. Let's see the news. Kohl's Seal. Okay, franchise group. Yeah. So I remember there were talks actually that they were looking for a different price and they were fighting on the price. So I remember when that was happening, I was like, that's probably not going to happen. I remember seeing that bet like a week ago actually. So yeah, another one that we probably went through. The market's pricing it cheap for a reason. So. Another 50% to go, says Burry. Hope he's right. If he's right, man, I'm going to like it. My cash is going to be used to buy assets at better prices. Great. I already kind of said I'm more aggressive than before. If you've been following the channel for quite some time, you know about the liquidity crunch that we've been talking about forever. And yeah, so not to bore everyone, because a lot of the other people in here would be like, please don't talk about that anymore. Please stop. All right. So capital mindset, do you look at a short interest? Yeah, I can. It's one of the many things that you might look at. And so if it's a drastic amount, it might be like, whoa, geez, oh my gosh, like something's wrong here. Now, for example, if you remembered one of the Rocket Mortgage was incorrectly cited for its short interest because the people were not paying attention to the actual float of the business. So the short interest was not what it actually was, if you know what I mean. So sometimes you have to be careful with those because Rocket Mortgage, by the way, is an American VIE, a lot better, not the same as a Chinese VIE, but a lot better. And so because VIE is an umbrella term of a structure that exists, and it can vary in terms of scope, scale, size, complexity. Some are more complex, some are less complex. Dutch Bros is another one. I haven't talked about Dutch Bros yet. VIEs are inherently difficult to understand, more difficult. They're way more difficult than the traditional business. It's far beyond something like dual classes of stock. So it goes beyond that. But yeah. Higher short squeeze, higher blah, blah, blah. Yeah. Neuralink. Yeah. Bullish on that privately held company, right? Okay. So oh, that's not for me. My told me to buy crypto late 2018. Talking to him after class, should have listened at that point. I mean, yeah, maybe. Yeah. Capital mindset. Does it make sense to invest in income-oriented ETF? Oh, I actually was going to do a video exactly on this topic, but we'll have the conversation here, Oleg. So let's actually pull one up, right? Like JEPI, they're covered call ETFs, right? I think JEPI is one. Equity premium income ETF. No, this one might not be one. What is this one? I got to find the prospectus. Where you at? Okay, so let me actually pull Jeppy. Let's do this. Jeppy. QYLD. That's the other one I was thinking about, actually. Thank you for Milan. I see your comment. QYLD. So this one is the covered call one. And Jeppy, what is Jeppy? Is Jeppy just the income one where premium equity income? So let's actually go here. Let's make JP Morgan pay the advertisement to Google, because I clicked on the ad version of the link. Okay, so let's see what this one focuses on. Deliver monthly distribution, less volatility. Okay, what are you invested in? Employs a proven bottom-up research within stock selection based on proprietary. Okay, so stocks. Okay, I don't think this is a yeah, I don't think this is a. Let me see. Show me your assets. Where are your assets? I don't really. Oh yeah, here, portfolio. Progressive, AbbVie. Okay, so it's stocks. It's a lot of stock. It's variations, but it's basically like stocks. Okay, so this is one probably I would prefer. If you put a gun to my head and you're like, you have to pick one, I'd probably pick Jeppy over QYLD, which I'll get to in just a second. But I don't really care for them. But QYLD is the other one that Oh yeah, I know. Thank you. I'm 100%. I have to. I own Google. Like, it's money going into my pocket, right? So QYLD focuses on a covered call strategy, and I don't like these. I really don't. Not really for me at all. And I know that among the dividend investing crowd, they might come up. I'd say, please, if you're a dividend investor, like, please don't fall for the yield traps. That's like the dark side of dividend investing. Dividend investing, yield traps, right? Stay away from yield traps. So this operates under a strategy that, just like, okay, I don't want to give you the fish. I'm going to show you the fish, all right, or teach you how to fish. So look at how a covered call works, and then think about a fund that generates its earnings against covered calls, and then think about a situation in which you would have bleed in a fund. Let's say you had a bunch of money or a bunch of shares of whatever, and then in this case, I think this is the NASDAQ, right? So you have the NASDAQ. How would you not benefit from consistently doing covered calls? And remember, you consistently have to rebuy. So keep that in mind. Your rule is you have to keep rebuying and then keep doing covered calls. How would there be like a bleed effect? And then kind of map that out. Okay. But in summary, I don't like income focused ETFs necessarily. Mainly because they're very likely, depending on the strategy, I guess, because you know what, someone in retirement might just prefer that and they don't really care about the total returns or whatever. But yeah, all well and good, right? Let's be honest. It depends on the person. VIEs vary from nearly worthless American ones. Amounto is so funny. To priceless Chinese ones. Yes. That's a negative 2.1 TBD Atlanta Regional Fed. Does this officially indicate a recession? I think we're about to report one, by the way, but no, I think they don't necessarily. I mean, the government will recognize it's in recession when it starts to say, and then the media will say we're in recession. That's when we're officially in recession. I think we're already in recession, right? I've been saying that, right? I think it's not like a genius thing to say for me, VIs invest. VIs were blah, blah, blah. You mean invented? Yeah, invented to piss off accounting students. Absolutely, yeah, freaking VIEs. Retailers are going bust from demand destruction, and stagnant inventories is a very worrying possibility. Supply chains headwinds have caused too high inventories into the worst consumers for a long time. Absolutely, Nash, you're just like destroying it. Thanks for the continuing. Yep. Oh, I already answered that. Are leverage ETFs inherently risky for complete loss of capital or just volatile? No. Because so they're taking on leverage. So you can actually have a complete loss of capital. So like here, I'll show you one. What is it? NJNUG, I think is one. Yeah. So here we go. I'm going to show you one that's like to traumatize you. I'll show you one. This will hopefully be traumatic. All right, so here you go. This is a 3x, 2x, not 3x, 2x gold miners. All right, not an endorsement. To be very clear, I'm putting up on the screen, not an endorsement. So, but yeah. All right, there you go. Yeah, so just be careful. If a recession, 2 quarters of negative GDP and a reversion, Q1 neg, why aren't we officially recognizing it? Because they don't want to. If they do, they're going to have to. There's a lot of implications about the psychology of the people, man. And there's an election year. It makes it very, very testy, very testy. Election year, you start saying we're in recession. Everyone starts knowing we're in recession. People start talking about how we're in recession. And then, for correctness or incorrectness, people are going to blame the powers that be at the present moment in time for that recession. It's how it is. Okay. It's how it is. Oh, the beauty of Chinese woman gives their VIEs intrinsic value far beyond the fundamentals of the business. This is also why they're completely causation. That's causation, not correlation, everyone. My econ professor is excellent. I mean, yeah. I have to agree with you, Elemental. But yeah, so all in all, that's pretty much what we have to look forward to. I think that, I mean, I don't know, what are you guys' thoughts on the markets? I see that I think my audience is mainly probably bearish right now. If I had to guess your sentiment, I'm not going to pretend to know your sentiment like back man. Oh, by the way, you guys might want to know this. So you know how like Tesla does that thing where they delay orders and stuff, or they've been delaying orders? They delayed my order. They pushed it back. So now I'll tell you, because it used to be like end of July. Now they pushed me to end of August, mid September. Sorry, no. Mid August to mid September. They pushed it back. So they pushed it back like by a whole month. So, it is what it is. But yeah, that happened. So they can just blame the recession on Putin. Yeah, that's probably what's going to happen soon. You've been buying quite a lot lately. I mean, I've been buying decently aggressive, pretty aggressive, you'd say. So I'll be buying all the way down, all the way back up. I don't really care. I mean, like, as long as I'm not putting myself in an irresponsible position where I have financial liabilities that are materializing, in next year or so, and I keep having enough cash flows coming in relative to what's coming out, my expenses, and also maintaining enjoyment in life, that's all well and good. And actually, so I don't know if I mentioned this. This actual watch was purchased with call options or covered call options, so which was nice. Okay, so didn't really even take it from my income coming in. Well, that's where strongman's going to come in. It's like, no, technically that's income because blah, blah, blah. Yeah, absolutely true. Right? Accountants, I know, true. It is income. Okay, so because technically speaking, I could have optimized it and put in, but remember again, for like we talked about the very beginning of the live stream, this watch is technically in some ways, but I'm not going to sell it in an investment of sorts, but it's not for me to enjoy. Okay, I'll keep buying. Yeah, you see, Dan's right. Dan is definitely experienced investor. That's exactly what you have to do. It's exactly what you have to do. Everything else is kind of like noise, right? Focus on what is in your power to control, and then keep that under control. So, pun intended. And then, everything else kind of falls in afterwards, falls in place, and good to go. Okay, Putin's recession, sentiments way too bearish. Can see big moves upwards to shake out retail with stop losses. Yeah, probably. Now 80% cash, but buying this week. Well, are you 80% cash now because you're sold everything like very recently, or like you have been? I don't know. Probably more like the have been. After the MU call yesterday, the coming earnings season. No. And there have been a lot of revisions. Oh, who revised downwards? Was it RH? I think RH did revise downwards, and that's why they're down too. So RH, I believe, revised downwards. So yeah, a lot of companies are going to start revising downwards because it's going to happen. Consumer crunch, the liquidity crunch will finalize itself. It will show itself in all aspects, as we said, not just the financial markets. It will, again, like we've been talking about for other live streams, other videos, it shows up in consumer spending too. And that's what a lot of the cruise liners have to contend with. A lot of leisure companies have to contend with. It's going to show up in every which direction. Okay. And so that's why, every country will, vary in terms of experience. So it's not only global, but I'm speaking US centric there, and even European centric. Okay, and then we just got a new comment saying something, but I actually want to talk about that. But yeah, I've been buying McDonald's stock and AMD. Yeah, McDonald's. See, like, look, and bet you probably buying McDonald's. McDonald's is actually, by the way, I don't know if I've told this story in the past, but the very first experience I came out with stocks was actually learning. Well, when I first learned about stocks, this was very young Fabio, like literally like 8th grade Fabio, something like that. And you can imagine how much this position is worth. But a very good friend of mine, the parents like showed me a position they had, and it was a McDonald's stock. And I was like, "Whoa, there's you own McDonald's," and he was like explaining to me, and it was I can tell you the name because I'm not going to tell. Well, not the name, sorry. I can tell you the amount because I'm not going to tell you the name. It was like $7 million back then in McDonald's stock, and it was a portfolio that was built over generations. And they've done very well for themselves. Like the two parents were both surgeons, and so they made enough money between them too. Like literally, mom and dad were surgeons. So all well and good there. And that was just one position. That was just the McDonald's position. And they were like showing me like, oh yeah, so we make this much in dividend income. And I was like, dividends? Oh wow. So they pay you. So I was like blown away. This like little kid just going, what the fuck? Like, so McDonald's stock has that place technically in my heart, so to speak, as like technically the first stock little Fabio ever learned about. So, but yeah, McDonald's, I mean, you're probably buying it for, just because it's a bellwether, it's a, monster of a company, et cetera. And you're kind of just building out the position no matter what. Because I imagine that's how they kind of explained their McDonald's position. They just buy regardless. They actually don't even pay attention to anything else regarding the company specific. It's not their only holding, but you know what I mean, if I'm explaining myself correctly. Okay, so anyways, stop taunting us with your talk of enjoyment in life. What do you mean taunting us? Taunting. Well, no, you can enjoy it and like, I hope I'm not. I don't mean to do that. I try like uh my I try to balance it out. Like I hope I never come out as like a dick. I don't want to be a dick. Okay, so I apologize for that. I don't know if that's what you meant, mental. But I'm like conscious about that. Like I try not to you know give off that. Like for example, I think like when someone ever makes an argument of not authority, but like I'm right because of like for example, that's why dollar amounts aren't disclosed because that's not even necessary. That's almost like a douchey way of saying like, oh, I'm right because look at this. Oh, I'm right because I have this. Oh, I'm right because of this. I never want to give off that vibe. You either agree with me because you hear the merits of my argument and that's it, or that's it, right? So, and I don't want to be that a dick like that. So, just a quick comment on that. So, bearish bearish on macro and market short term. Yeah, and you see, like that's what I love about the capital markets community. There's so many different opinions and stuff out there, and everyone has their own perspectives, and it's the beauty of a market. It is the beauty of a market. So, and you're bearish on it. Someone's buying, someone's selling. It's awesome, right? It's awesome, and we can just all talk about it. That's what never going to be the arbiter of truth, right? I am not the truth. Unlike some people out there who say that they are the truth, I'm not the truth. First one to tell you, not the truth. Only everything in here is just like opinions. It just says that. And then you guys have your opinions are basically as valid as mine, for all intents and purposes. Argument from authority is a terrible form of argumentation. It's a logical fallacy. Regardless of whatever occupation I ever hold in life, it never will make me right just because of that. Some random person can be more right than me, and I could be like some, whatever, and then, right. So yeah. Right here, this comment. So we should all buy QLID to buy and watch like yours will do. No, don't do that. Don't do that. No. Covered calls and covered calls on holdings I have is what I do. I don't buy QYLD because I can control a lot of the key aspects. I have videos on the channel regarding that, but they're not like the focus to talk about options and stuff because I have to try to be responsible. There is content, I guess, coming later, talking more specifically about some key aspects of options. There's even free videos online that are still out there for options. So they're great resources. But yeah, okay. MU's growth, data center growth, though overstated fear in AMD. Yeah. What is AMD at right now? I have to check because the market's now closed. AMD's at 73. 73. I love how that old video now on AMD that was like wrong because it went up like 50-ish% after the video where I said AMD's overvalued and it was like at $100. Then it ran up to 150. Then subsequently now it's like, yeah, and it's less than a year from now. We're the 1 year anniversary of that is in around like October. So we'll see. Wait until China invades Taiwan. If you thought this was bad, wait until supply chains get destroyed. Yeah, that would be absolutely ridiculous. That happens. The United States cannot allow that to happen. They're not going to let that happen. I would assume so. I mean, we've been surprised before, but yeah, all those things. Marshalls, Burlington, Dollar Tree, kind of retails in recession. Yeah, credit crunch consumers. Some of them will do really well, but I think the market's almost like identifying that already. Like the market's not stupid, by the way. So don't think the market's stupid. It can have moments of stupidity because sentiment, fear, and etc. But these broad-based moves, a lot of times the market kind of catches on to it if it's more obvious than not. So Dollar Tree, I think, trades on the more premium end. Marshall's not so sure. Capital mindset and all the crypto exchanges, lending going insolvent, Voyager Digital. Yeah. We actually were just talking about this, RK. I was talking about a comment, and I'll read it again for you. I received a comment in the Voyager Digital video saying, I've never had any trouble liquidating my funds and getting them transferred back to my bank account because in the video, I stated that that is a risk. And like I said, if I had to still respond to some old comments, going back saying, you can't blame people for their own decisions. Those people, who are talking about Voyager Digital, that was their decision. My main contention actually is about them supporting the product itself, right? So saying, go to my link down in the description below, and there's a 9% yielding interest thing. When you go to a bank and they tell you there's a product, they always give you the full range of risks. Voyager Digital does so too, but you're almost acting on behalf of them as like the salesman, and you're not doing so. While it's pretty easy, first of all, to kind of analyze that there are a lot of risks. There are a lot of associated risks with those financial products or instruments. Now, this counter argument to that might be saying, well, they believed in it themselves. Well, then, there's a point or there's a line in the sand where like ignorance can only take you so far. But regardless, I think that it was incredibly responsible. So anyways, this person, I did respond to them and saying, you may not have, but they still have the ability to do so in response to someone saying they haven't stopped my funds. I'm finding out today from you guys, because I didn't actually look this up. I don't follow Voyager Digital every day. I'm finding out from you guys that they've just so done so. If I respond back to this guy now, I'll feel really bad because I'll be basically, I don't know if he's having a rough day now. And, the last thing he needs is like some capital mindset YouTube thing comes up and just says, haha, like you don't have your money anymore. I don't want to do that. So I'm just like telling you guys here. But basically, I said you may not have, but they still have the ability to do so. It depends on what is going on with your deposited assets as per their terms and conditions. And because, again, in the response to the video, he said, that's not going to happen, basically, right? And there were other comments. Back in the day when I made that video, there were a lot of meaner comments, people defending Voyager Digital. The company I've noticed to have the more cult-like followings were Tattooed Chef, Voyager Digital, and Arrival. I have no idea why this Arrival thing had so much love. I have no idea. It's crazy. But yeah, McDanks slaps. Absolutely. At a late night after the club. Gulp price for McDonald's. Probably a lot lower than what it is today. But again, depending on what you're buying McDonald's for or what your strategy is, like a dividend investor is just looking for that cash. They don't give a dang about the price, really. In some strategies, some investors, and they don't care about the price whatsoever. And yeah, buy YouTube. I don't know how to buy YouTube. Yeah, you better be conscious about it when you live stream. No. Okay. I did that because I said I would do the live stream. I was going to do the live stream strongman. He invited me onto the live stream. I'm not going to say like no. And I still have the technical ability to do so. I didn't have I wasn't trying to have the camera. The camera wasn't facing the what was going on. It was just facing me. It just so happened to be that I was on there, and then the audience asked to see everyone else, and then I turned the camera. So that's not me like trying to show that elemental. And then I haven't done one since. Like I'm not going to do live streams from that. That would be like, yeah, that's not me. That's why I hope I don't, I don't like to do that. Right. That would be like salesy, and that's ugh. All right. We have to maintain modicum decorum in class, etc. Okay. So why is it smart to buy the YouTube index now? It's no, I wouldn't buy it. I don't. The YouTube index is mainly almost a joke. maybe there's some individual stocks within there, Lars, but as a whole, no. You're basically buying like the crowd voted stocks, right? No. That's like those are the reason why retail trade investors, earn only 2%, right? And I doubt that my allocation strategy that I applied to them is going to somehow make it outperform. Who knows, man? Who knows though? A lot of those might go bankrupt now. Okay. I didn't add Voyager Digital in there. I'm so stupid for not doing that. Okay. So, God, my 20s are going to be destroyed by the boomers messing up the world. No, okay. Don't become a doomer with macro. Please don't let that happen, because then, you're going to like not invest in anything. No, don't do that. Don't do that. I hope I'm not do that. That would be a mistake, but it's not going to kill either company. New to the channel, in your opinion, what new specific opportunities do you see in the market at the moment? If you have already discussed, don't worry, I'll go digging. That's okay. I'll repeat it. So I think that there's going to be a lot of opportunities in the industrial space, because there's a lot of pain ahead. There's a lot of pain ahead, and the market's going to identify that pain, and then you're going to be able to sift through the rabble, and you're going to be like, oh, that one's nice. That one's nice. So, if you think the world's going to recover, if you think the world's going to go to absolute garbage, then maybe we have prolonged struggle, but there's going to be some stuff to sift through the garbage and kind of see. You got to think for yourself here, because if you're new to the channel, this channel is not to give like buy and sell alerts or anything like that. It's me sharing my opinion, then you develop your own opinion, you counter my opinion maybe with your opinion, you kind of point out things I'm not looking at, and then you can talk to other community members, and then you share your opinions with each other, etc., and then you kind of develop your own little strategy. You might have agreements with some of us, like we might point out things and you'd be like, I didn't even think of it that way. Oh, I agree with that, right? So some stocks I've been buying have been like Global Payments. I bought Global Payments, about Meta, about Netflix. I'm looking at buying some industrial, about Leggett & Platt. Maybe 3M might throw in there at some point. Yeah, I've been buying some. Discovery, not Discovery Financial, sorry, and they're not called Discovery anymore. Warner Brothers Discovery. That one's another one. So, yeah, all in all, I might buy like over the course of the next. I bought Coupang as a spec play, and a Medical Properties Trust is my only REIT right now, because I sold all my REITs a while ago. So if you're new to the channel, there's a lot of videos for you to catch up on. but yeah, anyways. I bought some Starbucks stock. I don't think people are going to stop drinking coffee in the recession. Yeah, they're not. And Starbucks, remember, during the last recession was actually a really good investment. And they went through a period of like nothing. Starbucks is a good case study of how CEO comes in, kind of destroys the balance sheet a little bit. Then the new CEO comes back in. He's like, not new CEO, old CEO comes back, and or founder actually. And he is just like, we didn't make the necessary investments. He's turning the ship around like that. He's going to leave next year, I think. In 2023, it's planned that he's going to leave because he's only coming back to just fix the problems of the past CEO, who he did cause the stock price to rise because he leveraged up the balance sheet to perform some shareholder returns in form of buybacks, etc. So yeah. I'm joking. Options content you want? Yeah, responsible options, that is. Yes. No. Yeah. Because like I'm going to keep it to very simple strategies. I am not going to because I don't want to be responsible for someone new coming in and then just like watching that video and then especially contributing to. I don't want to contribute to that. I really don't. Especially since complex option strategies aren't necessary for the vast majority of people. They're not necessary. Okay. So responsible options content, we'll keep it to like the basics, keep it simple, maybe an introduction of sorts so people understand it, how, they can integrate options into their strategy, maybe stuff like that. But yeah, I'll say this, it makes a lot more sense to integrate options into strategy once you have a very large portfolio, right? If you have once your portfolio gets larger and larger and larger, it starts to make sense in forms of like selling calls and stuff. And but buying calls gives you some, added leverage exposure, but whatever. Okay, so do you think oh gosh, we're going to like some 99% of Italy in every financial institution fails? yeah, like that's not gonna. Do you think in the future we will have a currency based on computer calculation, kind of currency tied to energy? I don't know, man. Maybe I'm buying assets, and then the world can settle what currency it wants to use, and then my assets will demand on that currency, right? And yeah, Julius Caesar is right on this, but going back way back on that MBA question, yeah, employers are paying for it, and you're taking some courses that will benefit in your career. So there was the CEO of Darden actually, who I met on a couple occasions, is he's he's actually an alumni of the same university, and he got his MBA. And so when he got his MBA, it was necessary, or it was help for him to get to where he is today as the CEO of Darden. So, as an example, I'm just giving you an example, right? And it was actually paid for by the company. So where it's Darden, right? I'm thinking the CPI might have peaked. Yeah, that's what kind of people are saying now. But if you kind of go through like the mechanisms for how it's peaked, yeah, year-over-year numbers are getting better. Yeah. What are your thoughts on inflation going forward? So I've shared my thoughts in the past on this, and it's, yeah, inflation would at some point get rejected by consumers. And so we've been talking about something called, the liquidity crunch. I don't know how well versed you are with liquidity crunch, or how the content on this channel about that, or you can even ask other viewers, because I've, broken their ears about this at this point. But yes, all in all, the mechanism or the mechanics, if I were to explain it to like a fifth grader, to keep it simple and very digestible, so to speak, for the sake of content here on YouTube, it's basically so that at some point consumers can only spend on so much. They have the necessities, they have the discretionary. At some point, when the necessities go up too much in price, the discretionary would decline. You could see falling consumer prices in the discretionary spend. Yeah, that could happen. What's up? Echoes from above. How you doing? And is that audio, Fabio? My audio. Oh, I'm an audio. I'm reading Tao of Capital about Austrian economics, and even in the very highly regarded book, they talk about the U.S. as a literally printing money. Video idea to explain printing versus moving of Federal Reserve, since nobody, even the smartest, don't seem to get this. No. The smartest do seem to get it. No. So, because I'm not the smartest. It's just like, it's easier for accountants to understand. That's how I kind of explain it. So, I would say that like the Federal Reserve would want you to think it's money printing. They would desire you to think that, but it's not the case. The smartest economists, I would say, well, I'd say it. There's a good how do you say? There's a good Harvard paper that actually gets into it. Why? And you can actually probably Google this paper. It's free to read, by the way. Look up. No, they're not lending out reserves. Harvard edu, and message me if you can find it. It should be easy to find. If not, I'll pull it up here, and then I'll just like show it to you which one to read. It's a really good read. It's really interesting. It's like 15 or 20 pages, something like that. It's dense. It's very dense, and it's very good. I think I thought it was really good. Okay, good explanation overall into some of the key aspects. I see you at the truck stop. Darth Fabius. Yeah. Oh my gosh, just like celebrating people losing money. No, I wouldn't celebrate. But Captain said, do you ever sell calls? Yes, all the time. All the time. I don't make videos every time I do it. I only have 2 videos of me doing it. And Strongman Personal Finance actually said this very correctly. People who are selling calls now are kind of doing it more riskily. You should have been doing that a while ago. So actually, I was doing it, I think, my opinion, was at opportune moments in time. And ideally, you would like to do it on a stock that you would otherwise be okay with selling. You're happy with it, and that you also would be happy with keeping the position. So then it's kind of like a win-win for you. All right. What you're going to lose out if you mess up on it is opportunity cost, not legit cost, but opportunity cost is a real cost. So, you sell contracts. For example, I sold Unum contracts at, I think it was like $37. Right now, Unum's at like $33. So I already expired. I got to keep my shares. Yeah, it's at $33. I got to keep my shares, and I maintained all the premium. I did the same thing with AGRD Holdings, right? Those are the 2 videos I'm discussing those because those are the 2 videos I have documented on Capital Mindset. And so, yes. And by the way, those are the ones that get the least amount of views. I do so almost on purpose with the titles and thumbnails. So with titles and thumbnails, where I think the video is something that is not something that should be like spoken about or mass spread, I do so because I still put up the content, like it's out there if someone really wants to find it. But the title's crap, the thumbnail will be crap, and it's not going to be like catchy. In fact, I love to put the word like telling you, hey, it's clickbait. And so the average Joe doesn't click on it. So, because I even have fun with it sometimes. So, yeah, they still have to report that. Yeah, probably. Some people think I'm bullish on like Baba still. Yeah, you know who you are. Oh my gosh, I didn't even see that. Coupang. Yeah, Coupang's a small holding in the portfolio, by the way. It's a pinned comment in the newest portfolio update video. I said to everyone, I don't do buy and sell alerts. I don't do buy and sell alerts. I was just because we have conversations. We all have conversations, right? So on Discord, we're having a conversation. I mentioned that I bought Coupang last week. So Coupang's a spec play for me. It's not big size, but happy to hear that. Yeah, I should have went all in, right? Should have went all in. Crazy. Let me actually pull this up because I didn't even pay attention to this. My gosh. Okay, because like with oh no, it's up. Yeah, it's up 18%. Look at that. So Coupang's a video in the video of Coupang. If you guys check that out, I said that the price was de-risked, and that was like probably accidentally the bottom. Accidentally, and I didn't buy it at the bottom, right? So you don't have to buy things at the bottom. It's almost like another case study there. You don't have to buy things. Well, we'll see how this pans out because I don't want to like jinx it, but um, you don't have to buy things at the very bottom. I buy assets I like at prices I like. Period. That's it. Done. And so yeah. So okay, we're doing good on Coupang. Coupang's the one that again in the pin comment in the newest portfolio update video, you can see it. And I mentioned it also in last Thursday's live stream. Last Thursday live stream, we talked about the new position in Coupang. But again, speculative position. Wouldn't it be awesome if it was a all-in position, but whatever. And then I went over like why it is. If anyone asks here, I'll explain again why it's a speculative and not a core holding. I know Stanley Druckenmiller has a huge position in Coupang. I don't know if it's up a lot because of yeah, I don't know why. If anyone knows why it went up today, you can let me know. I haven't checked it out. I sold all my Polestar after a bubble. I plan a dollar cost average. Yeah, I mean, you see, like I love this. Everyone has strategies. When I see people say strategies, yes. Why did you choose to deep throat so much in the GPN so quickly? One of your top 3 holdings? Well, you see, like it's a top 3 holding because I have a lot of cash. Cash is coming in, and right now my biggest holding by far is like Google, and then like the next holding. So like will it remain a top 3 holding as I'm aggressively buying stocks? We'll see. I like the company, and I liked it because one, it was at low enough levels where I thought the fundamentals matched. Also, because you have to keep in mind, different parts of it. We looked at the accounting in the video. For me, I liked it. Another thing is I liked it at an amateur level support, right? It was on the support, amateur. So I had cash coming in, and I did say this in the video. I had cash coming in. I just wanted to deploy it. I basically just came in and deployed the cash that was coming in. I had a windfall of cash, and I was like, boom, here you go. So I just bought some. I do that sometimes, and you might notice that more often than not, when I do like a one-time buy, it's outside of my typical strategy. And you'll see human makes mistakes, right? So it might be a mistake in hindsight, might be not mistake in hindsight. We'll have to see. I'm comfortable with it, though. I'm completely fine with it. It's not like a Thor Industries, where Thor Industries I put in like like somewhere like 3%, and even live, I would be on the show with you guys live, and I'd be like, I probably overdid that, and I wouldn't change it. And I was like, all right, I finally corrected that. And so yeah, but that's one that I'm not really like concerned about for me. But everyone should be different. Someone who's concerned about wants a better price. Wait for your better price. Don't worry about it. That's why I always find weird about the finance or YouTube finance community. I think there needs to be like a change of sorts. Don't get mad at people for not wanting to buy your stock. Don't get mad at people for wanting to short your stock. No, just talk to them, like who cares? Be more mellow. Just like, okay, hear them out, right? We all have different opinions. It's cool, right? It's cool. So like I said, if you say, I wouldn't buy GPN, it's too expensive. Great. Wait for the price that you want. Coupang, wait for the price you want. Buy, don't buy. If I say stock is bad, who cares, right? Like you like it, have at it, right? That's what you want to do. Have at it. Now, I will give my opinions maybe as to why someone is wrong, etc. Blah blah blah. Maybe they're like overtly missing something, or they're misrepresenting something, as in like someone saying something doesn't have any debt. You know who you are. They're not watching this, but like you guys know who they are, and they're not that bad. I'm being too mean to them. There's way where I should not be too mean to those content creators. All right. Anyways, Coupang, all that good stuff. I should have made Coupang 100% of my portfolio, guys. You know, just kidding. All right, capital mindset. What are some of your ETF mutual funds think that would do better in the current environment? Okay, so you know what? No, not an endorsement. Not an endorsement. I've mentioned this in the past, but not an endorsement now, because I'm exiting this on Monday. For sure. And I don't share this in the because it's not a stock, it's not a company, it's not a publicly traded company. It's like a tool investment, and I've discussed tool investments in the past. And that's I for the environment we were just in was TTT, if you've ever heard of them. But it's not something you hold forever. It's like it's an investment you make if you believe a specific set of circumstances will occur. And I'm going to take away the position. I want to just take out my profits, and I don't want to stress. And then I want to redeploy that into some other stocks. Actually down 3.05%. Dang it, should have sold yesterday. But we'll see what happens Monday, right? I'm not selling it at the highest. At the highest, I think TTT was at like $68. So, but I'm happy with the performance, and it was a performance for the liquidity crunch. The reason why I did not talk about it and don't discuss it is because out of an abundance of responsibility, if I was incorrect, one, it would have been bad for someone who, just new to the markets, and they see that and they're like, just going nuts with it. And so that would have been bad, right? I didn't want to be responsible for that. And it's not really a stock. It's not a company. There's not really like a fundamentals. It's quite literally a bet of some type of asset class in a specific direction. And then like the counter to that, and also because it's ultra pro short, right? So like I said earlier to some of your questions about leverage ETFs, out of abundance of responsibility, we're not going to, I've never endorsed those to the people. If you do so, it's not because anything I ever said, completely on your own research and this choice, right? Then the other one that's like the opposite. If you think rates are going to decline, you have TLT, because that's an ETF that could benefit in a lowering yield environment. Now, this one I can talk about a little bit more extensively and feel almost like not as bad because it's not leveraged. So it's a non-leveraged ETF. So if rates rise, you're going to be absolutely slaughtered here, right? If rates keep rising drastically, you're going to get slaughtered. Now, if you think the Fed's going to have to cut rates and the Fed's going to lower rates and we're going to go into like infinite QE levels and rates are going to go down to zero and below, whatever. But, this should, in theory, benefit. And I had a play back in the day. I actually have the article on my LinkedIn about it. When I had shares of an ETF called GOVT, which is similar to TLT, but TLT was actually, I think, better. Would have been a better play. Shoulda, coulda, woulda. And during time of strife, it does well. During times of rising rate environment. So if you think rates are going to come down, benefit. Sorry, go on tangents. I know some of you said you like it when I go on tangents, but I always like try to say, I gotta, keep going, guys. Keep going. All right. Lost porn. I don't know what lost porn about what. I love reading Wall Street Bets, options, disaster posts, LOL. Yeah. I don't drink rum. I got absolutely, my body rejects rum because of a trip I did in my youth to Dominican Republic. When I was in university, we had a tradition with my guy friends, because when university I had a tutoring business, so I had a decent amount of disposable income for someone my age. And so I went on a lot of, I would go on vacations once a year at the very minimum to different places. We went to the Dominican Republic and we went on this boat ride. So what happened was, it's so stupid when I think about it. Older Fabio cringes at younger Fabio. There was no water on the boat. Very hot day, no water on the boat. And we asked the guy, we're like, can we have water? And he's like, we don't have water. We have rum. That whole vacation, just like so much rum. But there were some beautiful moments. Like we had like this chilled night that was nice. We were on the beach playing dominoes. We bought a bottle of rum, had a good time. Me and my 4 amigos. It was good. It was good. Good times. But anyways. But yeah. Fed's essentially printing money. Cheerleaders increasing the money supply at the Treasury prints money meets increased circulation demand. Yes, but you know how I feel. That's think that's the Harvard Review, is by Professor Richard Warner. He's incredible. Well, let me see. Let me see who the writer is. I think it might be. And it's who is this? Who wrote this? Author. No, it's the one by Paul Sheard. And he's the chief global economist and head of global economics research in New York. He's the one. So, and it's titled "Repeat After Me: Banks Cannot and Do Not Lend Out Reserves." It's this one. It's a good read. You should give it a read, right? Give it a read. Like I say, I like to call these out to spur the intellectual curiosity. Just read it. How long is this? It's like, yeah, it's 15 pages. Like I said, it's like, and this page doesn't even count. This is not even a page. Ends here, right? And oh, look at that. And you see related research. Look at that. And you can go down list and read even more. Look at that. Spur your intellectual curiosity. Go out there. Learn, my children. Learn. Be knowledgeable. Books, knowledge. Buy my course. All right. Don't know if you covered Meta so far today. What are your thoughts on today's news? Didn't look at the news today. Was been doing this live since, so let me go Meta. Was out working, finished my final project for my current employer, and now I'm done. We finished the last thing. All right, so look at this. Meta, what's the news today? What happened? Meta could be bracing for a tornado quarter. Blah, 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 blah. Internal Facebook memo warns company must be 10 hours ago, 8 hours ago. Aren't they like cutting down costs? Is that it? Oh, here. What is this? Novi is shutting down Novi. Is this it? Specifically, which one? There's a lot of news that came out. Oh, okay. It's a cryptocurrency project, but I don't know if that's the one. Okay. Is that the repeat after? Yes. Yeah. It is that one. Okay. So you guys found it. All right. Cool. Just wanted to make sure. I found that one too. So what's the Coupang thesis? Coupang thesis is exposure to e-commerce in China, and not China, in the Korean market. They just have to dominate the Korean market for me to actually pan out as a good investment. They just have to dominate the Korean market. That's all I really need for them. They're not Amazon at all. I hate when people say they're the Amazon of Korea. They don't have AWS. Very different businesses. So yes. Who bought it at $40? Who bought what at $40? He bought Coupang stock? Let me pull that up. Was Coupang trading at $40? Really? Oh my gosh. Yeah. So I think I'm gonna do well on Coupang. I like I wish I bought it in the video, obviously, when I said, oh, it's de-risked, right? That would have been the best time. For now, that's the bottom, but accidental bottom. And we don't have to pick the bottom. So hope you guys know that. And again, like you have to like not allow your mind to cloud your judgment or ability to then buy just because the stock's gone up. Even if the stock continues to go up, I have to keep looking at it and say, okay, should I buy? Same with like Google, Alphabet, any stock. If the stock's a buy today, you shouldn't allow your old price to kind of affect that. Everyone kind of struggles with that. That's like a little weird psychology thing that people suffer through. Kevin Mine said, what is the worst investment you ever did? Something that you believed. And so, okay, so not Baba or something like that. Well, actually, no. Look at this. So I had a portfolio that mainly consisted of, well, actually, I'll give you two. Actually, two stocks. All right. Don't own either of them anymore. Okay. So one of them was not my old portfolio. You see the remnants of it. So like Amazon used to be a bigger holding in the portfolio, and you don't see Shopify, you don't see Mercado Libre because back in the day, my portfolio was mainly focused on a couple themes: cloud, e-commerce. That was basically it. Not basically it, but a big part of it was investing in cloud and e-commerce. And those positions did fantastic for me, did wonders for me in growing my capital, et cetera, blah, 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 blah. One stock I remember was a Chinese VIE, guys. This is, the younger Fabio. People learn. We learn things. As I grow up, I learn more. And as I become older, I learn more. And tomorrow, I'm going to be a better investor than yesterday. Or maybe not a better investor, just know something a little bit more than yesterday. A lot of times, you guys teach me something new about a respective industry because you guys are all in different things, right? You guys are all working in different fields, different parts of the world, and you live in different places. All these different perspectives, give good information. But I had a company called Baozun, and I mean, not really like a bad thing, but like I remember for a long time I just basically had dead money in it. I neither made nor lost money. At one point, I was losing a lot of money, and then it finally recovered, but it was dead money. right? I'm out of it. I was out of it now. And then Baozun was a company that helps. If I actually pull them up, Baozun, I'll show you. Like, oh my gosh, they're $11 now. Oh gosh, this company is absolute. Yeah. Oh my gosh, if I had held the whole time, I would have been. All right, so let me show you this puppy here. Yeah, you guys wanted to see. I'll give you two. So the second one's an American company, but this is the global company. And I was actually, you know, why I was thinking about this, because you guys ask me that more often than not you specifically, Lars, but I've gotten this question before, like, oh, what's your worst, one of your worst investments that come to mind? And sometimes it's hard for me to remember, and so I actually went and thought about it and looked back, and I was like, oh yeah, that one was pretty bad, and that one was pretty bad. So the next one's going to be like an actual bad one. This one was bad in the sense of opportunity cost, because it really didn't go nowhere. So I didn't even know it was trading at $11 now. But this is like literally an old stock. So I bought this one back when I was investing heavily in Shopify. So to give you guys an idea of the themes, and Mercado Libre. And this one for a while was a good one, a good performer. And I didn't buy it here, by the way, before you think. I did not buy Baozun here. And I thought, okay, I had so much success with the American variants, right? And this is where the bias comes in. And this is where you can see the flawed logic, right? This is the flawed logic. So I looked at, I was having a lot of success with Shopify. My portfolio had performed extremely well with that company. And Mercado Libre also performed. You can, guys, if you want, you can outline basically Mercado Libre and Shopify together. And so around here, it was, I figured out this company. I learned about this company, and I was like, okay, the pitch to me was, this is the Shopify of China. And I went through like the same phase. And so you can see kind of how my perspective on Chinese companies has also shifted and changed in time. And I didn't know, I didn't know the intricacies of the VIE structure. I just looked at it like, oh, it's a Chinese stock. Cool. And this is, 2017, much more immature Fabio, younger Fabio. So give me a break, right? And then so I purchased shares of Baozun thinking, the exact same thing. I was like, okay, so I can repeat it. Thankfully, the position wasn't, like a lot, right? And there were a lot of questions I had. I did know that they weren't exactly the same thing, but people called them the Shopify of China back in the day. If you guys are old enough into the markets, you were participating in the markets for a while now, and you pay attention to all these things, you remember that this was called the Shopify of China. Even CNBC called it the Shopify of China. And it goes to show you that CNBC doesn't know what they're talking about sometimes. But anyways, long story short, I was buying here, and then it continues, it rises up, and I'm like, wow, great. And I'm buying here too. I bought heavier here. And basically through this whole time period, I felt like a genius up here, collapsed down here. And I was like, all right, well, cool. I didn't really buy more because I was like, all right, whatever. And just thankfully, pretty much I sold at small loss, small profit, right? Some shares, small loss, some shares, small profit. All in all, I had no idea. So had I held the whole time, I'd be down quite a bit, actually. Let's just pretend I bought everything like here, for example. I'd be down like 82%. Oh. All right. So thank God. Because I don't know what happened to this company. This company, I guess, oh yeah, this is like the China scares and all that stuff, sentiment stuff. Yeah. Because maybe like, let me see. What if I had somehow, it would be down like 23-ish%. But anyways, yeah, that's one of them. And then here's an American one. So Newell Brands. Another one that was like, this is one that's a case study of kind of fallen knife, kind of recovery, and also a lesson on super investors, all three. So, if we're going to point out, that's why I wanted to like look back and really think about them, because I gave examples of like playing with a sub, but that's not really a mistake. Like, so I sold Microsoft, though. That's not necessarily a mistake. That's an opportunity cost. No, these are actual monetary mistakes. Now, this one was sold for a loss, a total loss. Okay. Not a total loss. Sorry. Total loss means it went to zero. It didn't go to zero, but it was sold for a loss. And so this company, let's pull up its history. So I'll give you like the historical breakdown, like a historian. All right. So I wish I could do a more zoomed in one, but I just want to focus you on this story. So I already knew about the company around here. This was actually introduced me originally by a friend. Don't worry, I did not buy around here. And he was like, oh yeah, there's this company, they make all these consumer brand stuff and blah, 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 Sharpie, X, blah, blah. I didn't really care for that stuff. But then when I noticed it fell, right? It fell around here. Okay. No knowledge, no technical analysis, fundamentals, yes. Now, the company had a lot of debt. The company bought another company. I forgot the name of that company. And the CEO did he was trying to do empire building. Oh, it's also a lesson on empire building. So far, this one's a good lesson on empire building, on catching a fallen knife, on super investing, right? It fits all of these. It really does. And super investor is Carl Icahn. So we have Carl Icahn. That's a super investor. So don't follow super investor just because he invests bad. Be careful to catch a fallen knife. Easier said than done on that one. And yeah, you gotta also, well, we'll discuss it. So I wish I could zoom in further because I could be a little bit more detailed. But basically, I bought like definitely around this period here, and even today, what are we? If I was to held still today, I'd be down 40%. All right. I believe this one I sold like around here, like pretty in 2018ish, around there. Pretty bad loss there. So that one was a bad loss, because this one I realized I had to cut my losses. Don't understand what I got myself involved in. Younger Fabio was like, this was stupid. Got in for all the wrong reasons. It was like, all the numbers look good, all this, all that. None of the nuance was actually done to fully understand this business, and all the damage that really had been done. Now, is it a buy today? Completely different story. Just because I had that bad experience does not mean I should just discount it and say, terrible business, never going to get involved in it today. Of course, back in the back of my mind, I'd be lying to you if I'd said there wasn't that lingering thing going on. I'm human, people are people. We have human brains. So I'm like, oh, I have a bad history with you. So yeah, those are the two that I remember really kind of deeply. So Newell Brands and Bausen. Bausen, yeah, I was long a VIE once, right? Was long a VIE. Bausen was thankfully a better one. This one was, and this one wasn't like thankfully a big position either, because position sizing, at least I was good with that, with this one. Okay, but 40% experienced loss. Of course, write that off against the gains. So, but yes. All right, so that covers those two. Hopefully that answers that question. Fabio printing, tendies, yeah. Kupeng Upeng. Commodities, ETFs are not a bad gamble in this environment. Be careful, because commodities could be reaching like the top. Careful. Capital Mindset, happy Bobby Bonilla Day. Hey, happy Bobby Bonilla Day to you too, Dan. Where's my course? No course. I look, I was going to make the course, and it was going to be free, by the way. But it takes a lot of work, because I'm also like a guy, I don't want to half-ass something. I don't want to put out a half-assed course. And it was like, dude, work and studying for CPA, and he's still making YouTube videos. It's having a wife, having a wife, having a social life too. It's tough. It is tough. Okay. So, and I have to keep or maintain the priorities based on some semblance of monetary value, because I have bills to pay, right? So I have to work, right? I cannot not work. Okay. So, it's going to come. It's just like, eventually. Okay. Eventually I have to get to it. Right now, priorities, I have to prioritize maintaining my studies for CPA exam. So I pass them in one go, also because my next employer is expecting that of me. And also, maintaining, sanity. So, but yes, Gates Foundation and IPO. Oh, he bought it IPO. Okay, so I think means leaked comments by Zuckerberg. I have no idea. I mean, I don't really care about his leaked comments unless it's like this thing's going to zero. Maybe he leaked it to buy stocks cheaper, or maybe get the buy, but that'd be illegal. But want to say what's up though. Be good, fella. Oh, okay. Have a good one. Happy Canada Day. It's so funny, Canada Day is today, and 4th of July, America. ASOS. Oh yeah, I have a video on ASOS. I said ASOS was kind of like, I know it's like a super invest. You see, like a lot of these super investors, guys, man, you can't invest because of the super investors. Never do that. Never, ever, ever do that. And so that's why, sometimes you learn the lessons the hard way. And yeah, it's good. It's good. It's good. But I did look at ASOS, so check out the video on ASOS, but I do have to do an update video on ASOS. So a lot of that stuff might be out of date now. Okay. So, but yeah. So check that out. It is out there. But those two pass. No social life courses. When capital mindset community starts demanding more and more and more, and just like, no, no, you can't spend time with your kids. You must make videos. It's like, okay, yeah. Yeah, back when I was doing interning as a paramedic, I've seen some crazy stuff, man. Seen some crazy stuff. Newspaper, yeah. Um, Yeah, that's also, like, the way one of my friends said it. He's like, you don't really have to, like, call it courses, but, like, through each video, you can basically give, and that's why, I have this like, when I do the iPad thing and I draw things, visual learners out there, and I explain things, I try to do my best, and that's basically the course. That's the course, right? Of course, it's not like a college level course, and that's what I was, like, trying to, design, and then, utilizing actual college course content, stuff like that, but yeah. Um, okay, so yeah, kind of, maybe that has something to do with it. Look, let's not rule anything out. If you guys are my therapist, if you guys are a hive mind therapist in a way, because there's many of you. So if you're my hive mind therapist, you can kind of see that maybe, yes, maybe I have some, un uh dealt with trauma regarding some Chinese VIEs, and that's the way why I feel the way I do. That could be the case, that could be the case. Let's not rule anything out here. Let's not rule anything out. Oh, did you want specific stories? Because there are some, I mean, crazy stories. Well, I don't even remember anyone's names, but it would still be technically, I think it would be illegal for me to say anyone's names, but I don't remember anyone's names. I never remember anyone's names. Kevin said he had 26,000 shares of Tesla on Discord. What? Oh my god. Oh my god. What is TSLA stock at? They're up though. He's up a lot of, no. I don't understand. Like, if I was in Meet Kevin's position, guys, in terms of like that level, because I don't have 20 million. I know I don't tell my net worth. I don't have 20 million. No, I do not. So but like if I had like that levels, like let's say tens upon tens upon tens of millions of dollars, at that point, I mean, like that's insane, right? Just that much money to just pour into Tesla as a percentage of your net worth. That's insane. That's so irresponsible. LOL, generational. Yeah, no, literally, he's being so responsible. You need to start thinking about other things at that point. Capital preservation. Like, what happened to that? There'll be more discipline with capex, so it should be okay. Confidence will work out in the long. You're talking about ASOS, probably, I think, right? Yeah, ASOS. Yeah, I'm seeing ASOS. Yeah, I have to do an update on ASOS. There is a video on ASOS, but yeah. I do hedge my positions. Positions. Blah, 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 blah. Positions. So I again, like the portfolio does not show options. Does not show options. If I do options, I do a video on options. Just because I do not feel that is comfortable. I'm comfortable to in any way potentially do that and show people that, and then the retail card, like that's not maybe a place for me personally on YouTube to kind of interact with. That's kind of like separate. But like I might do that. I don't do that for every holding. I don't do that all the time, and I don't only do that with options necessarily. I can do that with stocks. So like a particular stock, like hedging, or a hedging of a particular scenario, right? Some scenario can occur, and then I have a position that benefits in that scenario. There is one stock holding because it fits under the rules, so I'm going to put it there, and it's one that I don't talk about. No dedicated videos as the channel's gotten larger, and it's there because it benefits during a time of uncertainty in the housing market. And if I think that there's going to be uncertainty in the housing market, I'm going to benefit in that place, right? And that's a stock, right? So that's a publicly traded company. It fits the criteria. It goes into the public portfolio. If it's something that's like an instrument, like something like a TTT, that's not going there. Options, that's not going there. So stuff like that. But you answer your question, yes. Does everyone need to do that? No. It's up to you. Like, what do you want to do, like with your portfolio? And then remember, like, not to give you giving the fish, but like you have to kind of come up with your own terms there. You know what I mean? But like, yeah, I do. It's completely amazing to me that Jeremy is still holding his Tesla position in the portfolio and still down overall. He's holding the Tesla position because I don't think he can let it go. I think that's like his brand. Because if he does so, it removes the gains he shows within the portfolio and makes it look worse. You know what I mean? So it's going to remove that weighted unrealized gains. Okay. And because it doesn't help already that his total gains are now in the negative, he's got to keep that. He has to keep that. I mentioned this back when I reviewed his portfolio, and I got a comment saying, "No, it's not like you can't." No, I legitimately think that he knows. I don't. Well, I don't know. I don't know how smart he is, but you guys be the judge of that. He knows. I think that might be overvalued. Which, I'll say this on the live, man. Hey, if you're listening, why did you not come to the debate? Why did you not debate? Where's the Tesla debate? You're the one who instigated it. You know who you are. If you're watching, you're the one who instigated the debate. Okay. And well, not a debate, discussion, or whatever you want to call it, but you instigated it, and you didn't want to do it. You ghosted. Well, we can talk about that live. But yeah, you guys know who I'm talking about. Oh, I wouldn't say Tesla is going to go bankrupt. I wouldn't go that far. But like they're not deserving of their market cap at the present moment in time. That's ridiculous. Let me actually pull up their stock. Like, I mean, heck, man. This market cap, what is it? 700 billion. They issue 1% around there. All else being equal, else, making things simple. It's like $7 billion, man. Oversimplifying that process, but yeah, that's like $7 billion. Capital is so cheap for them. They're in such a blessed position. The car companies would fight and die for this position. But yeah. Yeah, so you guys are discussing a thing lower, but I'm a bit scared of that stock. Boohoo. Oh yeah, Boohoo's another company. Just the fines that Tesla reportedly should pay at this point will wreck them. So this is something I've discussed in older videos about Tesla, like that. You gotta. I don't know if it's. I don't know if it's something that will cause a problem for them in the future, but yeah, like for example, FSD, full self-driving. If they pay, or if they engage in full self-driving, and they sell you a car that's promised to be full self-driving, and the regulatory authorities say no, that's not full self-driving. It needs to be equipped with LiDAR equipment. That's a problem because you sold me a car that was supposed to be full self-driving ready. What are going to be the remedies? Are you going to have brand annihilation? Are you going to pay for retrofitting all those cars? What are you going to do? So that's a concern. I don't know. I don't have the answer to that. That's just a question I have. I'd ask anyone who's looking at Tesla, what do you think about that? Am I overblowing the concern? Or is that actually a concern? I don't know, right? Could it be? So I don't have the absolute truth. So ASOS, you guys keep talking about ASOS stock. I have to do another video on ASOS, man. Like, what the heck? All right, wait, let me look at the ASOS American price. 10 bucks? No way. No way. When did I do the video on ASOS? I feel like I did the video on ASOS at like 20 something bucks, something like way higher. I remember it being way, way, way higher. Yeah. Wow. What the actual freak happened to ASOS? Oh my gosh. Absolute annihilation. That's crazy. All right. So drop to the point where Jeremy particularly break even again. Oh, in the 40s, which isn't necessarily impossible. Yeah, no, it's not impossible. Actually, that's probably where it should be, or around closer to there. Like probably like at a Tesla could probably claim, because of their projected growth, 100, maybe $200 billion market cap. That's a big range, but where it is now, no. There you go. What is a Z? Oh yeah, Bacon. We're still going. I know it's crazy. Well, I'm gonna close it off soon because I actually got to do another bit of work for something else. But yeah, so all in all, guys, I don't know what you guys are feeling about the markets and stuff, but good live stream. Lots of good questions. Lots of interesting perspectives given. And yeah, where do I start? Yeah. I almost want to see where this conversation ends with ZYZZ. All right, but yeah, all in all, great stream. I'm gonna probably get some grub, and then you know, get started on some work. All right, we talked a lot about different things on the stream. We're approaching 3 hours and 20 minutes, so yeah, I should probably cut it. All right, so I'll probably see you guys on Strongman's live stream tomorrow if he has one. If I don't, I'll see you guys on the next live stream, or you'll see the videos of Capital Mindset here and there. And on that, guys, yeah, I'm getting some grub, getting some food. You know, got some homemade chicken downstairs. So, so yeah. Thanks for the stream. Enjoy your weekend. No, enjoy your weekend. And no, Bacon. I'm not gonna do another, like, I'm not gonna go into a Discord call now. That'd be absolutely insane. But yeah, Grubhub, bullish on Grubhub. Yes. All right, guys. Thank you guys so much for watching, and I will see you guys on the next one, or you'll see me on the next video. But live, I'll see you guys on the next live to talk. See you guys.